to acquire Shandong's wine production facility and estate in Dindori. Whether this can give it the kind of respite it needs is the key question. But on the charts, Kush, anything on a Sula Vineyards?
Interesting setup. I have to give it that, because there has been an uptick in the last few sessions, volume-backed uptick, and it is starting to now hit that 20-day moving average. If it closes above that, there's a good possibility that the massively favorable risk-reward ratio combined with the positive trigger could actually take the stock higher. So I'd be keen on this one. If anyone does enter, I suggest a stop loss at the 145 mark. But on the flip side, there's also GM Breweries consolidation on the verge of breakout within the same space, on the verge of breakout. So if you want to consider, that is also a trade that you can consider. Stop loss around the 1020 mark. A close above 1060 will actually give it a fillip for 1100 and higher levels.
We are now on the verge of breaking 23,000, by the way. Amar, I'm asking you because we are close to the weekend, and in the anticipation of people lightening up some of the longs that they may have had on Tuesday and Wednesday, would you go short on the Nifty at the current levels?
Going short in the Nifty at the current levels might not be a very good idea, because there could be some sort of maybe a discussion. If one needs to go short or wishes to go short, then ideally 23,200, 300 is a level to watch out for on the Nifty for the short side. And we've just started the day. We might see a pullback also. So I would say going short at the current levels might not have the risk-reward ratio in one's favor. But overall, the trend has been very weak and continues to remain weak. So for Nifty, it's been more or less a sell-on rallies only till the time we see consolidation and stock moving and Nifty moving above the 23,400 to 500.
Ola Electric has some gains today, so keep that in mind. But HEG Graphite, as Hiral pointed out rightly, the showstoppers of the morning. Brigade has a 9% uptick, guys. Any news that we missed on Brigade? Up about 9%?
They've signed a 700 crore GDV.
I pointed it was in my list today.
I'm so sorry, I missed it. Okay, in which case the question to ask Parag Bhai is, Parag Bhai, any of these southern-based real estate players, because all of them, Parag Bhai, have come in and said that the GCCs are more than compensating for any kind of demand loss because of any potential IT slowdown.
Correct. So basically, real estate stocks have fallen significantly because real estate sales have also a little bit slowed down, definitely. At least in cities like Bombay, where you have an impact of portfolio value erosion boiling down to even real estate purchases. But of course, tier 2, tier 3 cities and many other cities which are not so much connected with stock markets will have some inherent demand, right? So I mean, the stocks have corrected significantly. It's a good space to start looking at. But when oil rises, there's an inflationary fear, and so there is a fear of increasing interest rates also, which on a macro basis is negative for real estate.
Having said that, from the entire real estate pack, would it be the south-based players or would you stick to your DLF?
DLF or Beroe kind of names. Or Godrej Properties, I am looking at it very closely because it has corrected from 2,500 to 1,500.
Okay, and no, it is the Lone Ranger. See me, pull that chart up again. Brigade Enterprises, the Lone Ranger in the realty pack today. Look at it, everything else is losing ground and this one compensating for all of that, up about 10%. As we pointed out, as Parag Bhai also said, it is a stock that has corrected very sharply. So therefore, would you trade it on the basis of Wednesday's move and today's move?
Brigade?
Yeah.
Not really, because I think the breakout's already come today. There was the build-up that happened in the last two sessions, and then now today you're seeing that big move, that big breakout. This is more of a hold. In fact, if you did buy it at lower levels, I would suggest profit booking, because the primary trend for a lot of these stocks, and Brigade included, remains negative. So I wouldn't be surprised to see if some kind of selling pressure comes in at higher levels. And as we've seen in the recent past, a lot of pockets of strength wherever anyone could find any kind of profits, that's been taken off the table. So there is a possibility that you could see some profit booking along the way on Brigade. So I wouldn't suggest a fresh entry.
Okay, specifically on IT, let's talk about all of the frontline counters, right? These are standing up from the front at for the Nifty 50, TCS, HCL Tech, Infi, Wipro, Techem. In the first 6 gainers, these are the standouts, right? The other one beyond that in the top 6 is currently ONGC. So Amardev Singh, if you were to trade the IT pack, would you trade the index? Would you trade individual names? And how would you trade?
I would look at Infosys from a trading perspective, because the stock has has corrected significantly, and there is a possibility that we could see the stock moving towards the 1330, 1340 levels, and the downside seems to be very strongly protected around the 1240, 1250 levels. So I think the worst might be over for the IT, and the stocks could witness a bounce back from the current levels.
Okay, so Amar Dev Singh, on that note, thank you so much for taking the time out and being with us. Really appreciate your time this morning. Just before we let our guests go and get a conversation going with an IT firm, Parag Thakkar, if people have to deploy cash, maybe it helps to deploy in the defensive names, though nobody is obliged to definitely, unlike a portfolio manager who has to put money to work.
Yeah.
So for example, unlike you, because you have a portfolio performance to show, a retail investor doesn't have to.
Correct.
Should you advise a retail investor to buy into any of the defensives? For example, let's say an Airtel.
So Bharti Airtel has been one of my large holdings. It is a very large holding, and I would like to say that, see, in a market where you earn just in India, for example, you are earning just $2.5 per month as a ARPU, and this company can make 60,000 crore free cash flow and 1,23,000 crore EBITDA out of that. And now Jio IPO can come for next 3 to 6 months, right? Now that is the valuation which is being talked about is 12 times EBITDA, and Bharti is right now trading at 9 times EBITDA. So there is a good, and plus Bharti's business is not affected by whatever is going on in the world. In fact, the use of mobile and the data is only going to increase, right? And plus they are getting subscribers also. So I think this is a very, very efficient company, run very well in the, I would say, intense competition scenario also. They fought back and they've regained the market share, and free cash flow 60,000 crores. And I think, so I would say that this is a great defensive play. In fact, when HSBC and Goldman Sachs note was also highlighted, I saw that in both cases, Bharti Airtel was highlighted as a defensive name to go with. Because actually it is not affected by all this, whatever is going on. Diesel price increase, for industrial diesel, it has gone up by 22 rupees per litre, which will just have a 1% impact on its EBITDA.
Okay. So, well, Parag Thakkar
apart from IT, of course, which we have spoken many times.
Got it. Yeah, sure. Okay. Gentlemen, both of you, thank you so much for taking the time out. Have a good Friday. Have a great weekend. Kush, we'll look forward to the IPL starting as well. So, I'm sure we'll get some quips about that on Monday morning. But in focus, as we move on from pure markets to, well, some corporate conversations as well, Mastek, certainly in focus. IT firm, it's also gotten a large UK government contract worth over 1,000 crore rupees, offering some support amongst the recent weaknesses as well. In news flow, before we get the management, Jasmeet Johnson with the key details. Jasmeet.
Well, thank you for that. The stock remains in focus on the back of that recent deal which we see in the company. In the past month, the company has nearly won 3 orders worth about 1,800 odd crores. While the first one is from the UK government, that's about the financial contract, about £15 million for 2 years. The second contract is from the Home Office at last. The value of this contract is about £85 million, and this is about 4,000 odd crores. Well, the third one is for 5 years. It's from Home Office biometric contract, about £49 million for the company. If we look at the stock performance, the stock is nearly down 50% if we look at the 52-week high levels, at currently trading at 1,400 odd rupees. Now, in terms of the other key metric, Q3 did see a slight downtick in terms of the overall performance. They faced and pressure coming from the furloughs as well as the overall pending project ramp-ups. While secondly, the margins did improve in the Q3 on the back of that better AI operational efficiency as per the management. If we look at the order book, it remains healthy and sees an uptick of 6% in the previous quarter. While the key question remains by the management is how does the overall UK geography shift from here on given the win of the new contracts. Secondly, whenever there's a new contract win, it impacts the margin in terms of the ramp up done. So can we see any near-term pressure in the margin in the Q4? That's something to watch out for, which will be key question for the management.
Okay, thank you so much for that, Jasmeet. That sets up the context. But let's get in Umang Nahata, CEO at Mastek. Umang, good morning and welcome to the show. Always a pleasure to speak to you. The deal wins that we're seeing in terms of the quarter itself and the concentration coming in from the UK right now, the momentum seems to be pretty strong. What is the sense that you're picking up? Because everyone's eyes are on IT as a sector. When will deal wins actually materialize into execution, not only for a Mastek but for the industry as a whole? What's the feeler that you're getting?
So I think the deal momentum, especially with UK, continues to be very active. We've been stating this consistently that the demand cycle in UK is very positive, very optimistic. If you look at these deals that we've currently won, one is a renewal of a existing contract. It's a public sector business that we have as a very long-term stable view. So again, we've renewed them for another 3+2 years, and that gives us a quite a good long runway with them. The other deal that we had was a net new deal. It's a new financial conduct authority. It's our the second large deal that we have had in the financial services area. In general, I would say the deal momentum is pretty active across all geographies, other than Middle East, where it's a little deferred. It was active, I would say, a few weeks back. But while the discussions are very active, people are, I think, deferring the decision making for a few more days or weeks. So we'll see how it pans out in the next few days. Execution is where the whole focus is. Next few months and quarters is going to be really head down execution of the backlog, as well as continued execution on trying to find net new business. So I think deal momentum and general market demand seems to be quite positive.
Morning, Umang. Alex here. I'm going to ask you a slightly broader question, and this is from the perspective of how you are executing and whether over the course of the last 3 to 6 months things have changed. Your financials suggested that there was AI-led productivity benefits that have improved margins. But I'm trying to understand, I'm asking whether you can describe what is actually happening right now. For example, if you take these 3 large UK deals, how would you execute it differently now compared with how you might have executed it 2 or 3 years back in terms of the manpower that you require or the resources that you're going to be utilizing?
Yeah, Alex, it's a great question. So the execution approach for IT in general, and of course for our businesses in UK and globally, has a lot of AI assisted execution today. So a lot of the execution that we do has AI assisted. It is across all areas, whether it is application modernization or testing or managed services or implementation services across the board. So a lot of that delivery continues to be AI assisted. And as you do AI assisted delivery, either the resource requirement comes down or the time frame in which you execute starts to come down. And both of them definitely allow for more efficiency gains. So that's what is really pushing some of this benefit to our bottom line and a lot more to the efficiency that our clients are starting to gain. Specifically on these contracts that we have in the UK that we are looking at, most of them are time and material or contracts where we are working in rainbow teams with the client and our resources working together. Here, what is going to change is the kind of composition of team that we would have had. So there's more like bottle-shaped pyramid is what is emerging, where you have a top architecture layer and then a young team who's supporting a lot of the coding and execution. So that kind of pyramid change is what we are seeing in terms of the teams that go out and execute this. There's a lot more of innovation thinking that is also going on. So many of these programs are also framework engineering programs, which basically set the roadmap for the future projects or technology landscape that the client would have. And these projects are already discussing of how would the client utilize AI in future. So is there data readiness there? Is there architecture readiness there? Have they built up the right compliances systems in place and so on? So a lot of the work that we are doing is also around preparing the organizations from a readiness for executing large-scale AI.
Yeah.
And the way we execute is also using AI-assisted technology today.
I understand. So then a follow-up to that then, Umang, because what I've gotten from that answer, and you've described it very well, is that there are 2 levers that you can use or 2 outcomes are possible, right? On the one hand, you're going to be able to take up more deals, and so there is a tailwind for revenue growth. On the other hand, you can do it more productively, so you will earn more per deal. So how is that going to affect, will it affect first of all fourth quarter, and will that be ramped up over the course of FY27? What will we see in the numbers, Umang?
So generally the direction is going to be positive in terms of growth for us, sequential growth as we look at from where we are heading. That's where we believe the whole momentum is. Having said that, there continues to be, surprises that we keep getting on. So, for example, we were really heading for a decent quarter for Q4, but now with the developments in the geopolitics over the last few weeks, some of our Middle East momentum has definitely seen some slowness in execution as well as slowness in signing up of some of the deals. But in general, if you look at a trend, we see decent tailwind in terms of net new order booking. And there's also good balance between the efficiency gain share, what we are giving to our clients versus what we are able to retain for ourselves. Having said that, the amount of investments that we have to make now to continuously evolve, I mean, it's a very disruptive time period, right? So you will have to significantly change your offerings, your approach, the assets that you have. It's a great time to really level up the differentiation that mid-tier companies like us had with the larger players. And a lot of time and energy is being spent on trying to create those differentiations, especially the domain-led differentiations that could allow us to really catch up in terms of the vertical capabilities that we have as compared to some of the other larger or other domain-focused players in the market. So it's an interesting market. I think it will continue to grow, not very fast, but steady growth with steady bottom line.
Umang, you are almost saying that all of the recent developments give you a seat at a table which you probably previously didn't have. Would that be the right way to look at it? And therefore, if so, what are the upsides in a steady growth environment to something like this?
Oh, so very much, I think you've pointed on the right area. A lot of the discussions today, the technical differentiation that we had between us and some of the larger players, those are almost marginalized. There's hardly any capability difference because AI allows us to deliver it with the same speed, with the similar degree of quality and efficiency that, based on whatever tools that some of our other peers had built over years. So that technical differentiation is gone. It's a lot more about cultural being, available, flexibility that we are able to deliver. Also a lot more about innovation. So clearly there is the opportunities that we get are much higher. The Financial Conduct Authority is a good example. It's a new foray for us in banking and financial services. This is the second large deal that we have secured after Bank of England. And it's a new vertical area. Usually BFSI was dominated by some of the larger players. But with the kind of innovation and capability differentiation going out, more flexible, agile players are now, customers are really liking to participate with them. And that's definitely giving us the room to do more business with them. I think there are interesting upsides that we are discussing. A lot of our US business and EMEA business had a lot of fundamental corrections that we were going through last year. We believe we've made all the corrections that we had to. We've got the business back in shape in terms of people, in terms of approach, in terms of capability. And we are looking forward to some interesting upsides as we go forward in the year.
Okay. Umang, the last question from my side is, we've spoken about the dependency in terms of UK and how big that market is. I want to talk to you about where the US growth and leadership goes, because that's where we've seen a churn that has happened. North America as a region has seen a decline for you, but now with the leadership restructuring, appointment from an ex-Google techie coming in there, are you expecting to see US again reignite specifically from the healthcare growth perspective?
Yeah, I think we've spent a lot of the last few quarters in resetting our US business, right from the team structure to our GTM to the capability structure, as well as getting right people onboarded from the leadership to the people on our board. Mark, who has joined us on our North America board. So I would feel we have reset the fundamentals extremely well. And healthcare and life sciences continues to be a prime focus area for us. And we look forward, we're already actually engaging with a lot new enterprise clients in that space already. So the number of engagements or the initial indicators are clearly starting to show some right direction and momentum. We had a healthy order book last quarter. We're looking for a healthy order book even in this quarter in US. And I think once we do a few quarters of healthy order book, that will really set the direction for good turnaround of the North America business.
Got it. On that note, Umang, thanks so much for taking the time and pleasure speaking with you. Wish you all the best heading into the end of the financial year as well. Yeah. All right, let's get you a few comments that have come through from the oil minister. And this is a post that he sent out on social media, on the platform X. And he said a few things, right? He said international crude prices are going through the roof right now, and I mean, that's, if anything, that's a bit of an understatement. Well over $100 per barrel. Prime Minister has decided to take a hit on India's finances again. The government had two choices: either raise fuel prices or bear the brunt on finances. And he said that Indians should be insulated from international volatility. And the government has, in fact, taken a huge hit on tax revenues. They've levied export tax as international fuel prices surge. So this is a considered decision that has been taken by the government. I was referring to it earlier. From an economic standpoint, remember that the Reserve Bank of India is an inflation targeting central bank. And so as soon as you have prices at the till, as Neeraj likes to say, going up, you will have a very sudden, a very sharp bleed through on inflation across the board. Not just the fact that it has a significant component in the CPI basket, but everything that is transport oriented or even power generation oriented that will have diesel gensets, etc., will start showing an increase as soon as the next month reading, right? So this is something that the government is very cognizant of. Ultimately, you will have a spike in inflation and you'll have the Reserve Bank of India that has to react very, very quickly.
And the Reserve Bank of India might have to react very, very quickly, even to the currency. Though, I mean, will we have to spend precious reserves defending the currency as well as reacting to inflationary pressures? Keep in mind, I mean, a lot of people believe rate hikes will not defend the rupee unless the real rates are negative. And for now, we don't have that. So maybe the Reserve Bank will be thinking that rate hikes will not be used to defend the rupee, but used at a point of time when inflationary pressures come in. And from the looks of it, we're bang in the midst of seeing inflation spike up.
And the other thing is also liquidity. Sorry, Hiral, one last point, right? Because in the situation where the RBI is not defending the rupee rate, that's what they say constantly, but if they step in to curtail volatility, they're doing it by selling dollars. And you're selling dollars, you're sucking out rupee from the system. And so that pulls out liquidity at a time when you were hoping that credit growth in the system would pick up. And you had several banks that came through, State Bank of India that came through and said it's growing faster than was earlier anticipated. I wonder whether that argument now gets dissipated.
I'm guessing the natural demand will come off a little bit for liquidity as well because of all that's happening right now.
Perhaps.
So.
And to add to that, we're talking about the pressure, and we just have the numbers where the cut in terms of excise is translating into a 1.7 lakh crore hit to the government revenues. So you know what you're talking about. It's a 5% gross revenue impact to the government. And that's a big number to talk about as well. But moving on. Nazara Technologies is set to consider a fresh capital raise at its board meet to evaluate fundraising options. Now, before we speak to Nitish Mittersen of Nazara Technologies, let's get in Parth to give us a bit more details, because recently they've announced an acquisition as well. Parth, good morning. What do you have for us?
Good morning, Hiral. So the board of directors of Nazara are going to meet on 30th of March 2026, and they will be considering raising capital via preferential allotment. They will be planning to issue either new equity shares or other convertible instruments. And this follows a series of recent global acquisitions. Recently, Nazara acquired 50% stake in Blue Tile Games and Best Play Systems, and this deal was valued at around 920 crores. Apart from this 50% acquisition, Nazara also has retains an option to acquire the additional 50% stake in both of these companies as well. So these kind of continuing acquisitions are causing significant outflows for the company. According to CLSA, the potential outflows for these kind of deals stand at around 2,800 crores. So these kind of it will be interesting to see how Nazara will be able to fund these kind of outflows, and because these frequent capital raises also puts in the risk of equity dilution for the existing shareholders.
So much for that. That puts things into perspective. Parth, let's get in Nitish. Nitish, good morning. Welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. You know, I know the fundraise is still slated right now. My question is the fundraise to actually meet your acquisition commitments?
Yes, sure. I think of course, since Nazara is a cash flow generating company, most of our fundraisers are likely for funding partly or fully of our acquisitions. But I think the important point here to really understand is that the trajectory that Nazara is to really create a very large global gaming platform out of India. And our M&A playbook is working very well. We've been at it for many years and proven success. And I think this is a once in a lifetime opportunity for an Indian gaming company to, become a very respected global gaming giant. And this is why we continue to double down. There may be some dilution, but we are very mindful that any dilution that we do is highly cash accretive on an operating cash flow perspective on a per share basis. So I believe that we are on a very good trajectory and very excited with how things are playing out.
Okay, so Nitish, how much are you looking to raise in terms of the preferential allotment and an amount that is going to be comfortable for the future commitments then?
Yeah, I think our board will review that number in the meeting and then take a call. So I don't want to put a number out right now.
Okay, and with regards to the kind of growth that you're looking at with the acquisition, is it going to be constantly inorganic growth that you will look at as a strategy versus the potential risk you're seeing with regards to equity dilution for the existing shareholders?
Yeah, let's just take a step back on this acquisition that we just announced of Blue Tile Games and Best Play Games. This company has done about 1,400 crores of revenue in 2025, which equals Nazara's own 9 months revenue for FY 2026. Even on a EBITDA level, the company that we are buying generated nearly 250 crores of EBITDA in 2025. Similar to, we did 177 crores for the 9 months of FY26. So as you can see, this is a business almost as big as the company, as big as Nazara, and will, on a pro forma basis, double our revenues and EBITDA going forward into FY27. So I think this is a very large move. It's a transformational move and a milestone moment for not only Nazara, but for the Indian gaming ecosystem. So yeah, I think we remain very excited, and let's see how it plays out.
Nitish, hi, good morning, Alex here. So this, the company that you're acquiring, and you've pointed out the kind of potential and the nature of the deal as well. I'm just trying to understand what you worked out on with regard to the trajectory that they've been describing and what you see it taking through in FY27 as well. How will it change the dynamics for Nazara in FY27 and heading into FY28? So if you look forward, not probably counting some of the acquisitions that you'll do along the way, and if you look 3 years down the line, what is the kind of trajectory that you see?
Yeah, so this company is a very interesting AI-driven, business. And AI is not just a buzzword or a story here, but really can be demonstrated in the numbers. The company has grown from $50 million revenue 3 years back to $150 million in FY25. So 3x growth in 3 years. And the beauty of it is they're doing 1,400 crores of revenue with only 40-45 people team, right? That really shows the power of AI. And the technology and know-how that they have on AI will also be absorbed into all the other studios and games that Nazara runs, benefiting us across the group. So I think that's a very important factor for us. There was a question earlier on organic versus inorganic. For us, it's always been, after an acquisition, the organic growth should happen. In the past, we've proven it multiple times, whether you take it from Kidopia, when we acquired it was 15 crores revenue business. It became a 200 crore revenue business in about less than 3 years, and many other such examples. So I think we are very focused on driving organic growth, even on companies that we acquire. And we're seeing many other opportunities. So I think this is really that large platform. Coming to that FY27 number, if you do simple maths on a pro forma basis, our revenues and EBITDA will double. We will, of course, try and push harder. And 3 years out, I think Nazara is, again, I'll say, on a very strong trajectory to become a respected global gaming platform.
So, Nitish, I'll come back to my question with regards to dilution versus accretion. You mentioned some bit of it already. Yes. You focused earlier as well that you're going to look at cash flow per share from here on, right? How much equity dilution is expected from the current preferential issue, and how would this actually look like as compared to the projected cash flow accretion that you're looking at from the $100 million Spanish deal?
Yeah. So the way we are looking at funding transactions is, one is Nazara is already cash flow generating across all our businesses. So one is obviously cash that is accrued internally. That is our first priority to deploy. We've also generally been a zero debt company or an extremely low debt company, which means that we have potential to unlock low leverage debt. We will continue to be conservative on debt, but at the same time, there's still significant headroom for us to, unlock that aspect to fund some of our transactions. And our last resort, of course, is to do some equity dilution. In terms of cash flow accretive, I don't have, specific maths to share right now, but in principle, every transaction that we do, we have a high focus on seeing that the accretion of value to the shareholder is multiples of the level of dilution that they may face.
Quick follow-up, do you have a target debt to equity ratio that the board is comfortable with, because you are looking at faster M&As right now? Your recent one of the filings did mention that internal accruals and debt is what you would probably use in terms of capex, but you're a debt-free company. So is there a number that you would want to share?
I think at this point of time, we would look at a 1.5, 2 times EBITDA, not more than that. So, continue to remain conservative in our approach. Okay. Our growth in Nazara over the years has really come by running a very stable platform. When others get disrupted, we have always taken advantage of it due to our stability, and that's something we're not willing to forego. So that's the number we should be watching out for in terms of the debt structure as well. But thank you, Nitish, so much. Always a pleasure to speak to you on NDTV Profit. But moving on, let's just quickly address the flashes at the bottom of your screens, where the finance minister is coming out and giving details in terms of the excise duty cut on petrol and diesel. She says that they've reduced the central excise duty on petrol and diesel, and this is mainly to shield the consumer from rising prices. This actually gives comforts to the OMCs, and that's the reason why the consumers will not see any price hike, though the cut is coming in wherein nothing will happen, nothing changes for the consumer from a cuts perspective, but a comfort level coming in for the OMCs, and that's the reason why she's talking about the comfort level when it comes to consumers as well. So interesting point coming in there from the finance minister. But let's quickly slip into a short break. On the other side, lots more lined up. Please stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially raising funds.
Welcome back. We're more or less at the low point of the day and we're barely an hour in to the start of trade today. It's not a pretty picture at the end of the trading week. 1.25% lower for the benchmark Nifty 50 and the broader market's not doing better. In fact, the mid-cap index and small-cap index trading with cuts of well over 1%. Let's pull up the small-cap index as well, 1.3%. So cuts across the board. And the fact is that even the small positive news that led to the OMCs doing reasonably well has been sold into. So the IOC, BPCL, HPCL stocks were up and about at the start of trade, but they've lost ground right now. They're trading in the red. BPCL down about 0.4%, IOC well over 1.7% or so. Statements coming through, of course, after the government cut the excise duty on both petrol as well as diesel. Hardeep Singh Puri talking about the fact that this was a considered decision, but Finance Minister very clearly stating that they've reduced the central excise duty on petrol as well as diesel. Spoke about the reason why this is in order to shield consumers from rising prices. Remember, the price at the till, at the fuel pump has not gone up, despite the fact that crude oil prices are well above $100 per barrel. Hardeep Singh Puri speaking about that. Just over the last 1 month, Brent crude is up, 50% or thereabouts, close to that, has been hovering around that mark. The government had two choices, either raise fuel prices or in fact reduce its revenue, and it's taken that decision to cut its revenue, hopefully for the short while, in order to shield consumers and prevent inflation from rising. But what are the implications and for oil marketing companies in particular? Somit joining in to tell you about the math and the key numbers to watch out for here. Somit.
Despite this positive announcement that has come in, the oil marketing companies have slipped in trade, and this is largely because even this 10 rupees reduction in the excise duty that has been mentioned for both petrol and diesel will lower the losses, but losses continue to be on the higher side, at least 35 rupees plus, as per what the analyst estimates are suggesting. And despite this lower excise duty, losses will continue to remain high, and that could be the reason why oil marketing companies have slipped in trade despite this positive news announcement that has come in. Now, post this news announcement, the excise duty, overall excise duty on petrol reduces from 21.9 rupees per litre to 11.9 rupees per litre, and on diesel it reduces from 17.8 rupees per litre to 7.8 rupees per litre. Now, it is important to note that there are four different components to excise duty. That is basic excise duty, special additional excise duty, agriculture, infrastructure and development cess, and additional excise duty. Now, out of these four components, only one component is where the excise duty has been reduced by around 10 rupees per litre, and that is what is reflecting in the table that is shown on on the screen right now. Now, as per Nomura, the blended marketing margin loss before this excise duty cut stood at close to 48.8 rupees per litre. Now, given that diesel prices and petrol and diesel excise duty has been cut by 10 rupees, these losses would also likely come down by 10 rupees per litre for the oil marketing companies. Now, every 1 rupee per litre reduction in the losses lifts EPS EPS of IOCL, BPCL and HPCL by anywhere between 14 to 24%. But do remember that despite this loss that is coming, despite this reduction in excise duty that is coming in, all the three oil marketing companies continue to incur losses on sale of every litre of petrol and diesel. Now, the impact of this lower excise duty will be much more when it comes to the books of government, because India consumes around 170 billion litre of petrol and diesel
on an annual basis, and this 10 rupees reduction on both petrol and diesel excise duty reduction reduces the income for the government by around 1.7 lakh crore, which is nearly 5% of the government's gross revenue on an annual basis. Now, it completely depends on whether this continues for the full financial year or for the half financial year. But as of this moment, the loss for the annual basis is expected to be around 1.7 lakh crore for the government. This is the rough calculation as per analyst.
All right, Soumit, thanks so much for getting us those details. Now, we've went on the ground to speak to Tenneco, and Tenneco is a 20,000 plus crore company, and my colleague Puneet actually went to one of their facilities to speak to the management, Arvind Chandra, whole-time Director and Chief Executive Officer of the company, at its newly launched DaVinci DCX damper. This is something that Tenneco believes could be a real game changer for the OEM space. Listen in.
Well, what do you think? If you buy a new Mahindra 7XO, you might be feeling the suspension or the back gets a lot of support. Now, that's because of one company that's manufacturing the DaVinci suspension system for Mahindra and Mahindra. And I had the opportunity to speak to the man who's made it possible to have a better suspension product in your car and for your back as well. I'm now being joined by the one and only CEO of Tenneco India as well, Arvind Chandrasekhar. Arvind, thanks so much for joining in today and inviting us to Hosur. It's my first time here. It's a compelling experience to say the least. The noise, the energy, and what you bring to the table has been one of the biggest aspects of the success of Tenneco over the last few months. Very, very notably in that sense. Talk to us about the DaVinci system as well, because a game changer for the Indian roads at this point of time. What went into those products and how is the success that now that you see it replicable with other companies as well?
Yeah. So first of all, thank you for having me. So the DaVinci technology, but before that, let me just kind of, we just had a recent IPO. You forgot to ask me about the IPO. So we were subscribed 62 times. Yes. It was very successful. And I think the reason is because we had a very compelling equity story. And I think the fact that on shock absorbers overall, our market share is 52%, which means 1 in every 2 passenger vehicles has a Tenneco shock absorber. That's a great place to start, right? And why is that? Because we are a technology company, right? Every time there's technology, complexity and disruption involved, Tenneco actually leads the way. And the DaVinci is yet another example of that, right? What it does is it's a good marriage. I call it a good marriage of high technology and affordability. In India, everything has to be affordable to the end consumer. And the challenge given to us by Mahindra, we accepted that to say, okay, what is the world's best mechanical suspension that is non-linear damping? So today, most of the solutions that we have in the field are the conventional one tune kind of ride, which means you are never comfortable in any road. Yeah. Not in a regular road or an uneven road or on a speed breaker or on a bumpy road or a pothole, right? But non-linear damping through mechanical suspension gives us the ability to take it to the next level, where we have these hydraulic valves that interact with the shim stack, and depending on the forces, the shim stack allows selective hydraulic flow. So that's what I would call mechanical ingenuity, and we do that without using electronics, without using software, without using sensors, without using motors. So that's a brilliant idea that has now come into the market. And we're very excited about it because obviously we thank Mahindra for their support and giving us the challenge. But this also finds much broader use across other OEMs, across the entire passenger vehicle space. We think it's going to become a big disruptor in the Indian market.
All right. So, and you will hear more of this conversation on all of our social media handles. It's great to go to the facility and see what the thing on the ground is, right? But what is not great to see on the ground is the energy infrastructure getting hit in the Middle East across various geographies. And somebody who looks at this very closely and the economic impact of something like this as well is Zaki Zaidi, foreign affairs expert, Iran affairs expert, and former researcher of Institute of Defense Studies and Analysis. Mr. Zaidi, thank you so much for taking the time out and being with us. And I hope I'm getting your name pronunciation correct. But at the onset, this is Neeraj here. At the onset, I'd love to know what is the timeline of the conflict that you are giving to the current piece that is on right now? And can the damage to energy infrastructure get worse before it stabilizes?
Hi, thank you for having me on your show. I'll see the Trump being in charge. It's very difficult for us analysts and the experts to actually gauge that what is in the mind. Okay, but going on seeing that how things are moving in the past couple of days, and Trump has given 10-day extension because he threatened to strike all the energy infrastructure like today, this Friday, that deadline expires. Okay, and he has given 10-day extension. And this is only happened. Maybe he has given excuse that okay, negotiations are going well, even though while Iran is denying that negotiations are going on. The 10-day extension, they have taken the threat very seriously that if any of the energy infrastructure in Iran is hit, or the Kharg Island is hit or invaded, they are going to burn all across, like all the Middle East, like be it Qatar, Bahrain, Saudi Arabia, UAE. So the global energy ecosystem is going to take a big hit, and it will take years to recover if they go ahead with the Kharg Island invasion. And we see that Netanyahu has been very much pushing for that, because here we see that like how Trump and Netanyahu are diverging from their war objectives. Netanyahu wants an endless war because of his political survival back at home, but the Trump is very desperate to climb down and end this war. Claiming that okay, Iran is they've agreed for a ceasefire. We are just going to wrap up this war in one. So we are yet to see that what happens today, like on Saturday and Sunday, what military moves are gonna happen. So we are yet to see that.
Zaki, good. I don't know whether I should call you Zaki or Mr. Zaidi. I think I'll go with the latter. Mr. Zaidi, so let me ask you about this, right? You've spoken about how you have a situation of economic siege being employed, and this is I think a good way to describe the situation, because if you look at the 15-point plan that was sent by the US to Iran and a 5-point rebuttal that was reportedly sent back to the US, the Iran administration is at this juncture talking about ownership of the strait, of the Hormuz Strait. So in a situation where the Trump administration is looking for an off-ramp, how likely do you think that this is with the kind of demands that are being floated across both sides?
Both sides, especially the US, they are having a maximalist position. And under maximalist positions, you can't have a common ground that Iran seems to be in a stronger position because they prefer a war of attrition. The longer they stretch this war, and the larger the economic pain the region and the world is going to face. At the same time, Trump had this quick, like a surgical operation and get out of it. However, that doesn't seem happening. And US and Iran, US asking limit its Iran's missile program. It is definitely out of the question. It is only the last line of defense for Iran. Iran is never going to cede that. They are asking for abandonment of giving that 400 kg uranium. They are never going to do that. Maybe when they signed a nuclear deal last time, it was a different environment. So Iran, under no circumstances at this point of time, is ready. They're under threat, under pressure. What they want is that they have always said, they want negotiations under dignity, not under threat. And they should acknowledge the reality of the region, their basic right, right of, having a peaceful nuclear energy program. But US is not ready for, anything nuclear that touches it, or even the missile program. So I'm not sure that where it is going until unless, there some sense come on the both sides that, okay, you both cannot have a maximalist position, you cede something, they cede something, and have a common ground. And because countries are pushing, India is feeling the brunt. You have the Southeast Asian countries, you have Arab world. They're all feeling the economic brunt, and I think that these countries are gonna put pressure on the US that okay, they have to find a solution. The war has to stop, so that because the world economy cannot bear this for too long.
Mr. Zaidi, your point taken. My question to you now is, we have a minute and a half. How is the regional spillover looking like? Because the threat against energy infrastructure when it comes to Kuwait, Qatar, the impact it could have on the broader GCC strategy when you talk about neutrality, number one. And two, the role that India could play as a mediator. Do you think there is a possibility?
See, first of all, GCC is all not united. Okay, Oman has taken a much sort of a neutral stance. Okay, when we talk about these two states, Saudi Arabia, UAE, plus Bahrain. Bahrain is like largely dependent on Saudi Arabia, so they have taken a very clear-cut pro-American and pro-Israeli position. And one day before all these, according to Trump, negotiations started, Saudi Arabia's crown prince and UAE's foreign minister, they said that like they should finish off Iran, their military threat, their nuclear threat, military threat, and war should not end prematurely. That's one point. On the very question that like how India could play a role, I wish that India being a big power, a big responsible power from global south, and we have always been, because of our values and principles, a very trusted partner for mediation in such kind of conflict. We have been trusted, all people across the board. However, the recent position, whatsoever the government thought, but the recent position taken by government, very much, which appeared like in favor of US and Israel by not, condoling the death of supreme leader or condemning the attack, on the INS Dena, that the warship that was shot and sunk off coast, our waters and off coast of Sri Lanka. So these things, our silence on those things, appear more likely, aligned towards the US and Israel. So I don't think like India as of now is in a very strong position, or the parties would like to involve India in negotiation. But India has always, remained. We have our image, we have our that perception, but the things are a bit improving. Let's see how it happens.
Yeah, that's all we can do at this stage. Thanks so much, Mr. Zaidi, for taking the time. Pleasure speaking with you.
Thank you for having me.
All right, now it's time for Talking Point, and it is my privilege to introduce you to one of the speakers that we really enjoy speaking to whenever he does come along to speak to NDTV Profit. Samit Vartak, the CIO of Sage One Investment Managers, joining us today. Good morning, Samit, and thanks so much for taking the time. It's one step forward and 3 steps back at this stage for the Indian equity markets because of the kind of pressure and the sensitivity with regard to oil prices. The latest move by the government is something that people were anticipating would take place with regard to the excise duty cuts. Do you think that it will put a salve on what could be a longer term economic impact and company impact as well?
I think, I think right now what the actions the government probably is taking, these are all short term, maybe just trying to heal the small wounds. I think the longer term, it's more of taking away the pain from the oil marketing companies and, having that transferred to the consumer, to its own balance sheet, right? But, someone has to pay for it. So, it will definitely impact the fiscal, the trade deficit, and will have some impact on the currency. But in the long run, I don't think it will have too much of an impact on the companies on ground. These are very short term things just to maybe calm down the sentiments a bit. Nothing really game changing.
Yeah. So then from that perspective, if you're looking at the kind of situation right now, nobody can tell, as much as practically everybody has become an armchair geopolitical expert, nobody can tell how long this conflict is going to last. So Samit, how do you react with this lack of knowledge on how quickly this is going to end? And nobody even knows how long it'll take for oil prices to settle down. So how are you setting your investment thesis right now?
I mean, see, the problem with the markets and the sentiments is that, it always keeps on focusing on the most recent issue, right? And, it was tariff a couple of months ago. Now it just keeps on shifting the focus. Now it's the war, right? But a lot of these short-term things only gives you opportunities. So, these are the times. I mean, in my recent memo, I focused on how these are the times, especially February and March, is one of the most difficult period for the Indian market, mainly because of the liquidity issues, a lot of advanced taxes. And so across the board, if you look at the last 16 years, there are 8 or 9 years when the bottoms have happened in March. Add to that this kind of an event, right? So these kind of events, do create short-term opportunities. As an investor, my job is to find bottom-up opportunity. And if I try to look at macros, it's extremely difficult to predict. I mean, it depends on the events, and I'm absolutely not a prophet, to predict how it will evolve. But when I look at the company level, there are tremendous companies which are emerging. I mean, one of the biggest advantage that India has right now is that almost the entire corporate world is deleveraged. We are not facing at a corporate level any kind of a stress on the balance sheet. The cash flow position is extremely high. I mean, that's the reason. I mean, imagine that in the last couple of months, small caps and mid caps have outperformed the large caps. I mean, these are extremely rare scenarios. Even in the last 1 year, if you see, the Nifty is flat, small caps are flat, mid caps are up 7-8%, right? So even in this mayhem, there are opportunities which you are able to find bottoms up. So if the index is doing that well, and if you have the ability to find really good emerging companies, I think there are really attractive opportunities. At the index level, you'll find, valuations which are 20 times or 25 times. But once you go down, there are so many hundreds of companies which are available at 1 year forward multiple of single digits. That's where the opportunity is. I mean, we do manage an AIF, which is more of, small cap oriented. Until end of February, it was still up 32%, right? And maybe in this month we would have given, but there are opportunities which you are able to find, and that should be the investor's focus. If you keep on focusing on the macros, it will just scare you away. I mean, as Elon Musk said, I would rather be optimistic and wrong, versus pessimistic and right, because economies and investor portfolio, the wealth will only be built by investors who are optimistic and look at, which are the companies you should bet on, rather than focusing on these geopolitics, which is completely unpredictable and not in your hand at all.
No, I think that's well said. It is beyond our hands. But what is in our hands, Samit? Good morning. Great having you, of course. Is trying to gauge which way the wind is blowing, right? And I wonder if, because of the macro issues that India has, and if capital is therefore going to be diverted from this whole focus that India had on capex as a nation to meeting some exigencies. And therefore, let's say if you were constructive capex oriented plays and manufacturing, would you shift your sight to some other pockets? Because right now everything has been punished.
Right. Yeah, I mean, yes, again, I would say that it's again short term, versus long term, because you may think that, okay, yes, the capex would take a hit because government's focus would be changing more towards, reducing the blow on oil, and the money would be more diverted towards that. But again, these are the times when probably the chances of reforms happening increases. Government probably would ease maybe foreign capital coming in. We don't know. I mean, we have seen the similar movie during COVID times, right? That, markets try to exaggerate things. And by end of March, markets had exaggerated the movement so much that even though things got worse after March 2020, markets kept on going up. Similar thing will happen even now, right? So government focus may change in the short run, but in the long run, I think there is no alternative to capex. The capex can go into, the themes may change. Now maybe the focus will move more towards renewables. It may move more towards defense, and maybe after war, there will be so much of reconstruction which will be needed, in the Middle East, that a lot of our building materials or capex-oriented companies will be benefited out of that. It may not just be, rebuilding of what's destructed, but a lot of countries will try to find alternatives. Maybe there will be huge infrastructure which would be constructed to move away from the Strait of Hormuz. There are a lot of, things which will emerge over a period of time. And if the government's intentions are right, I think we can take advantage of that. So as an investor, my job is to see, where sort of the macros are moving towards and try to find companies which are there. I mean, the good thing about India is that there are so many new emerging entrepreneurs who are so smart and so hungry. And I believe that with, these opportunities coming up and with the AI, if they are loaded with AI tool, they can match the best in the world. And, that's what my job is to find those entrepreneurs who can build world-class companies. And I think, we are at that juncture where, the technological difference between the global entrepreneurs, who could spend billions of dollars will heavily reduce, mainly because of the AI, capabilities, which a lot of our entrepreneurs will be able to leverage, and the kind of applications and businesses they will be able to build on top of that. I think, that's where the opportunities will emerge, and these can be humongous opportunities.
Okay. So, Samit, good morning. Hiral here. You're saying opportunities will emerge. Let's combine all of this into this last answer that I want from you for the investors. One, sentiment's extremely negative. Yeah. Technically, investors are being forced to sell. There is underperformance. This is a period when usually you see liquidity coming back into the system from the month of April onwards, as you just mentioned in your first answer. And then the fear which is already there. And you're saying that probably one should start looking at investment opportunities. With all of this said and done, would you advise investors to start nibbling in now? And if so, which will those pockets be categorically which one should look at?
Right. I mean, it's important where to look at, I think, the pockets, because there are two things, right? One is opportunities which everyone is known, everyone knows about. So for example, defense, right? So most of the defense companies which are, listed in India, especially the ones which are a little larger, I mean, they are sort of incorporating a lot of positives, So as an investor, I don't really have much of, attractiveness. There are companies, in the smaller space which are building, electronics which will confuse the radar to detect an aeroplane. There are companies which are lakhs and millions of units. There are companies in managed spaces, which are corrected so much that I think their opportunities actually are increasing, whereas, the able to benefit out of India moving more towards renewable. There are, power-related infrastructure companies or renewables companies which have corrected a lot from the top, which are becoming extremely companies which already are incorporating the positiveness, but there are companies which are completely neglected in the space. So even within the same sector, you'll find companies who are trading at 15 times.
Samit, I'll still ask you the last question before we wrap up the show. Which themes? So I agree that it is very bottom up, but still there might be some themes, right? So you just mentioned one or two. Can you just tell us that if you have within your portfolio, where is the highest concentration?
is renewables, more geared towards solar for sure. There are chemicals which will be used in battery storage, because battery storage is becoming one of the most important aspect today. If you want to sort of de-risk ourselves from the oil shocks, right? So there are chemicals. So electric vehicle batteries, was a very small component, but the battery storage system is, multiple times of that. So there will be more and more indigenization of manufacturing of those, and hence, local companies who are basically catering to that is extremely, going to be decimated. I mean, there are 4 or 5 listed players, but a couple of them are really good, huge cash flow generation, even though they don't show P&L profits, mainly because of the way the accounting works in that spaces. But if you look at the cash flow from operations, it's pretty humongous. There are building materials still. I would which will still be in demand, not just for India, but also for the global. Everyone would want to de-risk themselves from oil after this shock. So we need to find out the sectors which will basically be benefiting out of the alternatives and people trying to react to the shock that which are completely neglected. No one cares about them, and everyone is focused on the top ones, like data centers of the world, or which are super expensive. You're not going to really make that kind of money in there.
Makes complete sense. No, but what is it that could work and what may not. But thank you so much for joining today. I do hope what you wrote in your memo and what you said in this interview today, that typically bottoms are made around Feb and March. Let's hope that the bottom is made in today.
My pleasure. Thank you so much. Thanks.
All right. Well, that's about the time that we have on India Market Open. Keep in mind, a lot of stocks are doing actually very well. Graphtech increases prices yesterday. From all three of us and the team that put this show together. Thank you so much for watching.
देखो मतवारा हुआरे केसरिया से मन जोगी
हर पल मनाओ केसरी त्योहार।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे ना।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would ask,
IIT Kharagpur, bright future, can get a good job.
US companies were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family. It was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी Initially, raising fund was also difficult for first few rounds.
Really, you got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav had met 100 investors and still not got one.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the this is a wedding dress which was not delivered.
Tonight is about the people.
Organizations and leaders who are setting benchmarks in people-centric workplaces. The winner is TVS Motors Company Limited. The award goes to Zydus Life Sciences Limited. The winner is Make.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us.
Related queries. My name is Puneet Zaveri. With me today is Thomas Sarkar, and over the next hour or so we'll try and solve all the stock related queries that you might have. So do start sending them on the numbers that are flashing on the top of your screen. You can also of your screen as well. But before we do that, a very quick check of how the markets are doing, because yet again today started off with what the GIFT Nifty was indicating, a downtick of almost 150 odd points, but then we have cascaded into a much larger pullback today, so almost down 270. What's happening in the oil and gas space, and hence the increase or reduction essentially on exports of the excise duty on petrol and diesel has been something that's been considerably highlighted. In the morning, you did see some key stocks like Tata Motors PV continuing to be on the downtick. There are media reports speculating that there could be an impact of a couple of weeks on production for JLR. Today, also seen Bajaj Finance continuing their downward momentum, and so is Indico, while the IT space, some selective defensive pharma companies continue to do well, and ONGC. Other bleak picture, and that has continued with the PSU Bank Index yet again. The biggest loser, and the Nifty Realty in the top 3 of the biggest losers today. Nifty Realty has continued and over advanced decline ratio, though, very quickly before I move on to our guest, shows you the broader market picture has been another key factor on a day like this. You are seeing almost a 9:1 ratio in terms of 1.7% now for the mid cap 150, small cap also down with a very similar percentage points. Let's quickly look at the BSE 500 though in terms of the gainers and the losers. While the seeing some big moves on Brigade as well, that 700 crore land parcel boosting the stock today. But on the losing side though, you're seeing Minda Corp, Sterling and Wilson Solar, AB Real Estate among the ones that are down and out today. So hopefully
over the next 2 to 3 hours of the trading session, hopefully some momentum comes back into the market, but seems to be a bleak picture for now. Let me welcome in of research at Mirae Asset, Sher Khan on the technical side. Gentlemen, both of you, thanks so much for joining in. Let me go across, take the first stock related query for today. It's on Larsen and Toubro. Our viewer is holding share. 15-year view that he wants on the stock, Tapan, and he's asking, given the current uncertainty, what's a target that he could expect for the long term? What would your view be? Should he continue to hold?
As more than 35% their order is coming from Middle East. But I think if things get settled down in 1 month or 2 months, I think they are going to get more orders also from there. Of course, for 1 or 2 quarters, no, as already the viewer is for the long term, I don't think long term there is a problem. So I think he's getting a good opportunity to invest more. If he wants, he can start investing, and for long term, I think much better return will be available.
He's holding few shares, bought at a price of 270 rupees. Saumil, any medium-term view on this counter?
Yeah, at this point of time in the medium term, I think the trend is expecting a downside target of 200 levels in the medium term outlook. In the short term, yes, we've seen a good bounce towards the 20 and 40 daily moving average. Bounce could have a resistance for the stock. In the short term, a little positive, but in the medium term, I'll stay away from it.
Got the view, Saumil, and welcome to the show. Let's go across, take our next caller.
Yeah, good morning, sir. I'm having HBL Engineering shares for 900 rupees, average of 400 shares. So what is the medium and short term? Yes, sir.
Okay, got it. And you said you want a short-term view or a long-term view?
Short and mid-term view, sir.
Okay, got it. At 655, would you recommend averaging down at this point of time? Is there enough evidence to support that?
Yeah, see, I don't believe in averaging on your looks good to me, and in the very short term there is a little bit of negativity, a little bit of downtrend. It may retest 580 levels. Decline should be the strategy if you want to buy fresh. My targets would be around 825. If it sustains above 825, then the next target would be 980, 985 levels.
Bought at a price of 558. He wants to know whether should he sell this counter and invest the same amount in BEL or Reliance Industries for the next 1 year. Tapan, any view?
Better to wait for some time now, because I think stock has fallen a lot, and I think BL also having a rich valuation, even Reliance. I think this will bounce back much better from here. So just wait in this stock only.
Got that view, Tapan. But the next query, and continuing with a similar theme, is from Sushila Beleri. Now she wants to know a view on MRP. Roughly around 179, almost close to 5,200 shares. What would your view be?
See, my view right now is very sideways to negative. I'm not expecting this not even expecting this entire consolidation of last one and a half month to break out on the upside now very in the very short term. The breakout levels would be above 192 193 level. Around 170 has a very strong support. That would be the right time to buy. Hold on to it. I think once the correction or the sideways correction has completed,
Okay. Next query is coming in on BLS International from Venkatesh. He's from Hyderabad. He has around 100 shares of this counter, bought at a price of 320. He wants to know whether
don't average it. I think currently the company is facing some issues also. The last result was not so convincing, so I think I'm better to wait for one more quarter. Again, the situation is not so great.
Caller for today, it's from Amchi, Mumbai itself. Vinod has a stock query for us. Vinod, good morning. Welcome to Ask Profit. What's your query?
Yeah, good morning. I'm a long-term investor, about 5 to 7 years. Do daily SIP over next couple of months, which could be predominantly from mid and small cap.
Okay, got that question, Vinod. Let me go across to Tapan then. Tapan, recommend for the next 5 to 7 years? I know it's a very volatile time period, so there could be a lot of changes in that aspect, but given that, is there something that you would recommend for Vinod?
Yeah, I think he can invest like the banks are coming. Also NBFC, also there are some stocks like Aadhar housing finance, and also if you want some of the hotel stocks also coming down. Sirma, that is also a good stock. So these are some of the stocks which he can add it for small cap, mid cap for the little longer time.
Yet another live caller coming in from Vijayawada. Anjali, you can go ahead and ask your query.
Bimta Lab shares of 700, average of 900 shares. So what is the short term and long term target for this?
Okay, long term target.
Well, I think if I see the fundamental and all that, last year it's been much better. I think, but the stock has fallen a lot from the top. So better to wait for some time. I think things will recover.
Wait on Vimta Labs, what Tapan suggests. But the next question, Tapan, also coming to you from K. Parthasati. He's a senior citizen from Chennai, holding EIH in his portfolio roughly at 390 rupees. You recommend him averaging at this point of time because the hotel space as a whole has seen a lot of correction. What would be your view?
Yeah, he can average. I think this hotel stock is good, and you see the coming to the domestic places only. So I think that is where this company will be benefited. I think the stock is good. He can average at this level also.
Right. Next query. Enter for short term. Saumil, any defense counter that looks attractive on charts?
Defense counter, I've been tracking BEL and HAL, but in the then we can enter these stocks because it has already been falling now in the very short term. So let's wait for the breakouts on the upside or if it sustains about 20-40 daily moving average, and then probably
there as well, Saumil. But the next question coming in, it's on a beaten down stock in that sense. Blue Jet is what I'm talking about. Let's pull up today's chart. Stock's down almost 4% as well as the 1 year chart, and you'll know what I'm talking about if you haven't tried. 1. So he is sitting on a considerable amount of loss at this point of time. Let's look at the 1 year chart very quickly as well. He wants a 1 year view, Tapan, on this counter. And there you go, almost down 22. Largely, Tapan, what would be your view on Blue Jet? Would you recommend Sabu to continue holding or exit this underperforming counter?
No, better to hold it. Company prospects will be good. Of course, the results are not been so great from last 1 or 2 quarters, but this sector is quite good. It will recover, and at this level, no, I think already much more is priced in. So.
In from Sudha from Hyderabad, and she wants to know the fundamental outlook on Shakti pumps. Are valuations reasonable at this moment, and should she buy for long term, Tapan?
We thought that for all these pumps and all that, it will be a good news. But the problem is all these companies are facing lot of cash crunch and working capital issues. And if you see the last 1 year results of these companies, to this government, whatever they propose, I think Wabag and all that will be a better option rather than going to this company.
Got that view, Tapan. But the next query that's coming in now, it's on media reports speculating a 2-week suspension in terms of production till April 8th. Now, the story goes that they have informed the suppliers about the same, but largely FY26 has seen a couple. Even then, a month's production lost, in the month of August and September, largely because of a cyber attack. So stock's been down and out in that sense. Now, Tapan, this counter now, would you recommend that, given that JLR is almost 70% of his revenues? Do you think it's a wise decision to average now?
We say the stock is down and out, and if you see this price, much more is already priced in, and I know that 2-week production stop is also is a problem, but better to wait, and if he is there for long.
Okay, a live caller coming in from Andhra Pradesh. Venkat, you can go ahead and ask your query.
Sir, I hold Geo Finance 100 shares at the rate of 326.
Tapan, should Venkat buy more 100 shares of Geo Finance at the current levels to average it out?
Yeah, he can. And it's available at a good valuation. Again, yesterday news came that they of the department will be coming into profitability next 1 or 2 years. So yes, I think he can hold the stock. From here, recovery will be there.
Siddharth Chaturvedi from Jaipur actually has a very interesting question. Global Health, Yatharth, Kims, as well as Narayana, Tapan. Which one is a preferred pick according to you? If you like multiple names also within this list, what would those be?
So I think then also if he wants to go, Nayana is good, even Yatharth is good. But honestly, I'm positive on all the 4. So he can take as a basket. Hospital as a basket will do well from here. So anyone he can choose.
100 office shares is what they're holding at a price of 380 rupees. Should average now, or any long-term view on this, Tapan? Office
space. Okay, office space. I think if I see here, see the problem is recently the quarterly results was not great, and I think this again the real estate is in a problem. only you can take these, not at this level, of course.
Got the view, Tapan. But time now, viewers, to look at the BSE FNO setup now, because you've largely seen a day where it's been a tough one for the markets, as we discussed. So take today for the Sensex, some IT names trying to pull up strength, but largely almost 27 stocks of the Sensex down today, almost down 1,000 points, more than 1,000 points now. Consolidation at the 53,000 mark, but failing to hold it yet again today. Consistently seeing pressure on that aspect for the Bank Nifty today. But when you this very quickly, of course, these are some active contracts for the Sensex, but look at the key stocks that are on our radar today in terms of short unwinding, the longs as well, very quickly. TCS as well as Samman Capital are some which are seeing long build up in trade today. TCS just a tad about 2,400 in terms of the other key in terms of short coverings. You're also seeing the IT pack. So also continues to see that pack, but in terms of longs being unwinded, Growth Properties is under pressure today, down 3.4%, while Hutco is the other counter, as well as a short build up yet again being built. Just started to get momentum on Tuesday for the first time after that consistent pressure on this particular counter, and yet again losing that momentum very, very quickly as well. So these are some of the key query now that's coming in from Srikanta from Bengaluru. Wants to enter the pharma space, Granules or Laurus Labs, Tapan, for the next 3 years. Would either be on your radar?
Doing well overall, and I think the demand will be there. Again, rupee depreciation is happening, that is also actually helping Laurus, and the fundamentals are good, and their overall commentary is for long term.
Queries coming in from Pramod from Bangalore, and Saumil, he wants to know the technical view on Reliance Industries. Is it a good time to enter?
See, Reliance Industries have been very however, in the very, very short term, it has been in a very tight range between 1300 and 1400. So that 100 points range has been there. Now, I'll be expecting the stock to go down till 1330, and the next level on the downside would be 1305. These are very crucial levels to watch out for. If it does not sustain, around those levels, then there is a little bit of pain, but however, the structure, the medium term and the long term structure still remains positive. So I'll be looking to buy around 1270, 1300 levels.
Query for Ashri. Good morning, welcome to the show. What's your query?
Sir, I bought India at the rate of 29,600, sir, 10 shares, sir.
One stock's trading at 26,000 now, and she's bought at 29,600. Should he continue to hold this counter, and if possible, is it a good time to average?
Yeah, he can hold the and the valuation is quite conducive. I think he can hold the stock, but yes, some of the other stocks also there in pharma which are doing well. So once it comes up on above 28,000, he can a bit on the pharma sector.
Time now for the rapid fire round in this edition of Ask Profit. Tapan as well as Saumil request you to keep your answers on buy, sell or hold, so we can take as many in the next few minutes. The first question is coming from Mohit. He's holding 200 shares of HDFC Life at 599. Can he continue to hold?
BTC bought at a price of 404, currently sitting on a loss. Should he average or sell? Tapan, any view?
Sell on rise.
Tata Motors PV, we took the fundamental view. Sawmill. Stock now?
I think I'll hold to it for a long term, but short term, definitely there's pain.
Sunita from Hyderabad wants to know whether should she buy Ellenberry Industrial Gases at the current level.
Bought at 505 Sawmill. He's asking if he should continue to hold or sell out on this particular move.
The book profit for short term. However, my view is
Bank bought at a price of 160. Should he continue to hold or sell? Any view on this, Sawmill?
Sell.
Oracle Financial, Tapan, a viewer has bought it. Ishwar has bought it at 6645. That's the only IT play in his portfolio. Should he add more now?
No. Sell on rise.
Motherson 300 shares bought at 65 for the long term. Should he continue to hold, Tapan?
Yeah, hold and buy on dips.
I will hold.
Prashant holds the Dixon at 12,240 Sawmill. He's holding a considerable quantity of 126 shares. What's your view on the stock now?
Capri Global bought at an average price of 178. Should he hold for the next 2 to 3 years, Tapan?
Hold.
Sawmill Tejas Networks bought by Ram at 516. A very volatile counter.
Graphite India bought at a price of 520. Wants to know whether should he sell at the current level. Sawmill, any view?
Hold.
Lemon Tree bought by Zakir at 125. Tapan, he's holding a 50.
Delhi is holding 2,000 shares of Patel Engineering bought at a price of 35. Can he hold for long term, Tapan?
Yeah, hold it.
Happiest Minds bought at 445 Sawmill by a viewer Lavanya.
Sell on rise, but the targets in the short term would be 500, 490, 500.
Got it. Well, that's the end of this round of the rapid fire in this edition of Fast Profit. But Sawmill, thanks so much for helping. Very short break.
हर पल मनाओ केसरी त्योहार।
सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture.
Talent through transformation.
I think it's an adoption of the technology, which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
बिटिया की शादी है हमारी।
बधाई हो बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा पत्थर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs.
IIT Kharagpur, bright future, can get a good job.
Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा.
Pitches like.
Initially, raising fund was also difficult for first few rounds.
Really, you got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav had met 100 investors and
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift an house, I couldn't shift it because of you. This is a wedding dress which was not delivered.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? Here we come.
India, a land of story and resilience. 1.4 billion hearts.
On WhatsApp, you can also call us, talk to us, as well as our guests on or your stock related queries as well. We still have Tapan Doshi with us. Let me welcome in Rajesh Bhosle. He's the equity technical and derivative analyst at Angel One. Rajesh, bought by Lalita from Bangalore, who is a regular viewer, at 259. So she is sitting on a considerable amount of profits. Asking what she should do now with this counter. Let's go home with 100% gains.
As of now, I would suggest to hold on to it because if we see the weekly charts, it has precisely taken support. So this week it's witnessing price correction. But overall chart seems to be forming a structural bottom. So hold on to it. Somewhere around 500 level, the stock has a strong support. So hold on to it.
The next query is coming in from Kishore from Hyderabad. He's holding 400 shares of JG Chemical, bought at a price of 375. He's a long-term investor.
It's the problem is with the profitability. There is a big pressure on the margin, and again the chemical business is overall not doing well. And I think lot of issues. Or banking which are available at a lower level.
The view Tapan, the next query that's coming in right now, it's on United Spirits. Now, stock has been focused. Is netting in a good profit for that as well. And if you see, this week has been very volatile in that sense. It's down 2%. but a lot of analysts put in a value to that entity of almost between 100 to bought 100 shares, Tapan. Ask if it's a good time to add 100 more. What would your view be on the stock now?
Well, the stock is okay, and as you told, no, RCB sold. Also, I think it will be conducive for the spirits and all that for the next few quarters also. At this level, if he is getting, yes, he can, not 100, but maybe 20, 30 shares, he can in part way.
Caller query coming in from Andhra Pradesh. Bharat, you can go ahead and ask your query.
Good morning, sir. I am holding 500 shares of Happiest Minds at the price of 445.
Okay.
So, actually, yesterday, Happiest Mind partner.
Okay. Any long-term view on this, Tapan? Happiest Mind?
Honestly, long term, I am not too much bullish on this stock. Already, if you see the margins, there in part of AI for this company. So my take will be, I think on rise, better to sell.
To sell Happiest Minds is what Tapan recommends. But the next question is coming in from Karthik now. He's holding BEML, but bought at 2494. He's currently sitting on a loss, a considerable one to add the least. But would you recommend, Rajesh, for him to add more at the
Definitely an underperformer, but now if we see the chart structure are moving towards its long-term support. If we see on the weekly chart, prices there was a rally from this level. So I would suggest to wait for now. If it dips further towards 1300 levels, that is the origin point of the last year's rally.
Holding few shares of BBTC, that is Bombay Burma, at a price of 1,450. He wants to know whether should he add more or exit this.
Because the market is showing this stock is also falling. Overall, I think the stock has already come down a lot, but my suggestion is, because it's a holding company, many challenges will be there in the future, so just hold, and once it comes up, maybe 20-30% up from here, he can sell if he wants.
And continuing to be on our viewers' radar definitely at this point, but you're seeing yet again that the Nifty is broken that 23,000 mark. We broke that earlier in today's trading session, but yet again under pressure for the Nifty 50. The next question coming is from Anthony. He's a long-term investor. Has an interesting question. He's looking to enter Interact Building Products or Jyoti C.
Can you spell the name again?
One's Interact Building Solutions in the prefab building space. The other one's Jyoti CNC, Tapan.
I think Jyoti is already down, but I think in auto ancillary company sector also, they are in the aerospace and defense. I think this looks much more interesting. So if he wants, he can add this stock at this level.
Shares at a price of 490, saying that the current share prices are at 390. He's is sitting on a loss. Should he continue to hold this counter or exit? Is there any chance of the share prices moving back to 500?
Depending on the government policies, if any change in government policy, it will hurt a lot. So my take will be, if it goes up now, better to get out from this stock and go to better stock.
Radar. 1,000 shares bought at 201. So, currently sitting on the loss. What would you recommend, Rajesh? Is there any upside momentum to what we're seeing in today's move?
Definitely hold. If we see the pharma space are showing relative strength, and even if we see PPL Pharma, it's forming a engulfing pattern on the weekly chart. It's on a strong around those levels. We need to revisit the chart, but as of now, it's on a strong support, expecting a strong up move.
Next is a caller query coming in from Bareilly. Arvind, you can go ahead and ask.
फंडामेंटली स्ट्रांग है, मैं ये जानना चाह रहा था।
ओके,
कंपनी जो फंडामेंटली स्ट्रांग हो बिल्डिंग मटेरियल की।
तपन, बिल्डिंग मटेरियल स्पेस में आपको कौन सी कंपनी फंडामेंटली ज्यादा स्ट्रांग लग रही है जिसमें अभी आप
LNG का प्रॉब्लम है, गैस का प्रॉब्लम है, तो काफ़ी सारी सिरामिक कंपनी डाउन आ रही है। उसमें एक कजारिया सिरामिक है, लीडर है, अभी थोड़ा नीचे आया है और आई थिंक थोड़ा वेट करके लेना, बट वो एक है कि अगर आप रखो से अच्छा रिटर्न देंगे तो ये कजारिया सिरामिक आप लॉन्ग टर्म के लिए इन्वेस्ट कर सकते हो।
होपफुली अरविंद जी आपकी क्वेरी सॉल्व हो जाए तपन के व्यू से, बट नेक्स्ट वन क्वेरी कमिंग इन ऑन I know it's a very limited time frame, but he's asking a short-term view of what could be your opinion on the stock. Any view here?
So after chart structure, so as of now we are seeing a higher bottom with whatever limited data we have, expecting a further traction possibly towards the levels of around 3100. So for a near-term targets of around 3100.
Shankar Mali is holding 2,000 shares of Praj Industries, bought at an average price of 400 rupees. Rajesh, short-term view on this counter?
Immediately there is a resistance around 335. Once that is taken out, we can expect further up move towards the levels of around 365 to 370. 290 levels.
Got that view, Rajesh. Praj Industries is, another very, very volatile counter in the last 1 year as well. But next caller dialing in from Bengaluru, Venkat.
I have got a query regarding NTPC Green. Okay, I have got 300 stock at the rate of 101. That is the average price.
Okay.
And is this? And is this a good stock to hold on for a long term of more than 1 year, or no? Can you average it out at this price? Because it has been falling down only. I would
too much in terms of even brokerages as well. Largely, they do prefer a lot of companies apart from NTPC Green in the pure play space like Wari. Is that your view also?
It will be, as you told Putin, better to exit from this. So already valuation is on a higher side. Actually, when they brought the IPO, at that time only valuation was quite high and the stock is not performing. I think still better to switch from NTPC Green to NTPC. I think NTPC will give a much better return from here. So switch to NTPC rather than NTPC Green.
Okay. The next query is from he wants to know whether can he hold the counter for the next 3 to 5 years. Any view on this, Tapan? Natco Pharma?
Yeah, good stock, and I think good recovery coming. Again, you see from last few. At this level, I'm quite positive. You can buy at dips for long term.
But Canara Bank, Rajesh is the other counter I want to put your view on. Ramesh from Bengaluru.
I mean, day before yesterday, there was strong positive momentum in the PSU banking space. But today, along with the broader market, it has slipped again. But if we see, the stock is hovering Hold on to it somewhere around 125, 124. There is a strong support. And once the prices crosses above 137, expect a strong move towards the levels of 148 to 150.
Rajani wants to know whether is it a right time to invest in Coforge for long term. Tapan?
No, I don't think so. No, because still we don't know where the AI enabled software. Of course, Coforge is good, but again, the valuation is on our side compared to other large cap also. So my take is better to avoid and go to other good sectors.
Spansi, good morning. Welcome to the show. What's your query?
I want to invest 3 lakhs in this market correction.
Okay.
So, what any 3 from mid cap and small cap sector.
And Mansi, do you have any equity exposure right now? Is this you are entering the market now?
No, I have already exposed.
Okay, you have. But anything on your radar for Mansi?
Yeah, as I told earlier, then I think banking may do well. So banking and NBFC, these are the two sectors where you can go for NBFC or DCB Bank. Then I think EMS sector, where I told Sirma and maybe Dixon. Dixon, of course, is the large, so I'll not tell about that. And other sectors, I think hotels and hospitals. In hotels, I think Lemon Tree, that is also good. So these are some of the sectors she can think about it for long term.
Raghu from Hyderabad is holding 89 shares of NHPC, bought at a price of NHPC.
So I would suggest to add more, but hold on to the current position because since last 1 year, not much has happened in this stock, but somewhere some base formation. We can expect some momentum back towards 95 to 100 levels.
Got that view, Rajesh. The next question coming in on ID. The stake sale might be off the table, and hence we've seen a correction on the stock. Should Suresh exit now at this point of time? Would that be your view?
Now reaching oversold zone and approaching its long-term support levels. So as of now, hold on to it. If we see the rally that started earlier, started from the level rebound from the 60 levels. So hold on to it, and when it bounces back towards 75 to 78 levels, we need to recheck the charts.
Rajiv Saha from Calcutta is holding hold or average. Tapan, any view on this?
Well, I think you can average. The stock has already fallen a lot, and if you see it is having a very valuation was on a higher side, but now I think it is much more reasonable compared to earlier. So yes, please add at this level. I have no issues.
Got your view, Tapan. But next caller actually.
Very good morning. I'm holding 750 ONGC shares, which I bought at 275 rupees. I would like to know whether to hold or sell and what would be the short-term target price.
Okay, you want a short-term target price. Got it. Rajesh, on ONGC, yet again, even in the short term, it has been driven by a lot of news flow happening in the Middle East. But on the charts,
overall chart structure remains positive on the high time frame, and high top, high bottom is still intact. The kind of positive momentum is there, expecting a further move towards 300 would be the immediate targets.
Well, Rajesh as well as Tapan and our viewers, it's time now for the rapid fire round in this edition of Fast Profit. You both know the drill. Let me go across to the first query on Lodha. This counter now and a target to watch. Rajesh, your view?
Avoid it. It's an underperforming counter.
Raghuram from Trichy is holding 150 shares of JSW Energy at a price of 487.5. Should he hold or sell, Tapan?
Hold.
Tata Power, Fortis or
Canada.
Rohan from Calcutta is holding 15 shares of Mahanagar Gas, bought at a price of 1,030 for the last 3 years. Tapan, should he sell or hold for long term?
Sell on rise.
Jindal Stainless is a good buy for Narayana at this point of time, Rajesh.
Is it a good time to enter RR Cable for the next 2 to 3 years, Tapan?
Yeah, good stock.
The next query that's coming in, it's on ITC, bought at 410. What would you
The Leela Palace Hotel for less than 1 year. Rajesh, any view?
I'm not tracking this counter.
Okay.
Any view that you might have, Tapan, on Leela Hotels, Leela Palaces? Volatile counter. Do you track it firstly? Is what Piyush is asking. What should he do with this counter?
Avoid.
Okay. Sign from
Chennai Petro, Rajesh, bought by a viewer at 845. This is Souvik from Kolkata. Should he continue to hold his 50 shares?
Let's hold on to it.
The next query. 2,200. Should he hold or exit? Any view on this, Tapan?
Hold.
A DLF stocks at a 52-week low, Tapan, is what Mahalakshmi suggests. Should she buy now?
PL at a price of 440. Short to medium term target on this, Rajesh?
Hold on to it. I expect a bounce to his 440 levels.
Our viewer holds BEL.
Karthik from Chennai is holding 1,000 shares of IFCI at a price of 53. Should he average at the current level, Tapan?
No, just hold.
Bajaj Finance or Shriram Finance? What's a good investment right now? What would you suggest, Rajesh?
Shriram.
But Tapan as well as Rajesh, thanks so much for helping us solve all these queries. But viewers, before we wrap, let's quickly listen into FM Nirmala Sitharaman talking about the government's recent announcement.
विदेश में मार्केट में दाम बढ़ रही है क्रूड का, उसके कारण पेट्रोल और डीजल का, एटीएफ का। माननीय प्रधानमंत्री जी ने ये हम निर्णय लिए हैं कि ऑयल मार्केटिंग कंपनीज को सपोर्ट दें और जिससे वो ज़्यादा दाम में खरीदने वाली चीज़ों को सरकार उनको मदद करेगी, मगर दाम विदेश में बढ़ रही है उसके कारण ऑयल मार्केटिंग कंपनीज खरीदना रोकें। ये से हालत ना हो, वो फिर भी खरीदें, फिर भी ले आएं और हमारी जनता को आज इस निर्णय के कारण सप्लाई कमी नहीं होगा, सप्लाई में अवेलेबिलिटी में कमी ना होगा। जनता को डीजल भी, पेट्रोल भी, क्रूड भी
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हाथ शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। केप्री लोन्स फर्ज निभाते हैं।
Tonight is about the people who built the places where we spent most of our lives.
The NDTV Excellence Awards recognize organizations and leaders who are setting benchmarks in people. Limited. The winner is Make My Trip. Mr. Vivek Pathak, Planet Cast Media Services Limited.
The Lifetime Achievement Award.
हाँ, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। केप्री लोन्स
SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come to
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
Achha. You started also with a fairly small amount, self-funded. What was months?
But we didn't got funded after that. One of the fundraisers, Pranav had met 100 investors and still not got one term sheet.
Focus is then you also get a lot of feedback.
I usually start with my day, where one or few of the emails would just say that you have ruined my life. I want to shift and
politics. Vanakkam Tamil Nadu. Here we come.
India, a land of story and resilience. 1.4 with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable.
The fairways of Qutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition from surgical iron play for a celebration of skill, sportsmanship.
Watching KYC, that's Know Your Company, and today I'm not going to let you go through the hoops of guessing the company because it's a very interesting one in Veranda Learning. Now, the EdTech space has been very active. Start to look a very bit interesting for Veranda at this point of time, given that they've done a QIP just about 9 to 10 months ago, as well as the demerger that's expected very soon, and we'll get to that in just a bit. classes, which give them access to a lot more on the offline side of things. Now, of course, they serve the learners preparing for competitive as well as professional exams. For all those that are present in this space. Now, they operate across some key examinations of the government, CA, higher education, as well as the vocational segment, which is a very interesting one. Also, given the acquire 14 companies in the last 2 to 3 financial years, and hence building their scale across key verticals. Now, the revenue model for the company is very interesting because, of course, a fee-based admission as well as course enrollment program. The course enrollment also, of course, needs a little bit of marketing expenses, and we'll question that to the management. But when you move on and look at the other key aspects, of course, revenue grew by almost 30% to 470 crores. Has been a decent growth, but profitability has taken a hit, and we'll get to that in just a bit. NCLT has cleared % of the company's revenue. Why is that? Is that needed at this point of time? We'll quiz the company about that as well. And JK Shah classes, as I mentioned, that the company had acquired, will be listed as a separate entity with brand sense for the current shareholders is something that's important to note. Also, the shareholders, of course, are scheduled to meet on April 24, 2026, which makes it very, very timely at this point of time to speak to the management. To simplify the structure, sharpen the company's commerce focus, and build the growth for the next vertical. And we'll continue to look if that makes sense for the future. Now, they have also made a profit. Reputed brand name as well as the person behind the reputed brand name. Now, amongst others, the government coaching exam institution has looking to cross almost 100 crores of revenue as well. So this test preparation for the government exams is a key growth vertical for the company at this point of time. They've also recorded the highest ever annual intake of 50,000 learners in the history of as well as part of a KYC's 8 parameters, but largely a strong growth driven by the offline, the online, as well as the residential formats for the company today. Income statement will be something that we'll start with as well and continue to look at the other ones as well, like balance sheet, cash flow, as well as the company's shareholding as well. Continue to look at the other move on, look at the other parameters. Shareholding is one. We've changed a little bit in terms of the return ratios because it is a loss-making entity on an annualized basis. So we will be looking at the income statement. Been a strong growth in the last year, FY25. Even when you look at the 3-year CAGR of 84% has been one of the major positives about this company. But look at the profitability has also taken a big knock in FY25, but this has improved in FY26. So there is some more resilience shown in this year. But because of what's happened, we've given the company gone from a loss-making entity to a profit one. Look at the margins, though 32% is quite decent. But revenue growth will be something that we'll focus on with the company. If the growth 30%, which wasn't meant for the that FY25 was a dip. You also saw the challenges because of Baiju as well as what happened with that space, putting some pressure on the margins. But Q3 was a positive picture nonetheless. A neutral rating for now for from profits don't go into the reserves, but still then the reserves have actually increased in FY24, dipped again in the FY25 to 183 crores, so has been a bit volatile in terms of that. In terms of borrowings also, that has steadily increased. Now this was of course to fund the acquisition also. They've done plenty of them, but 2022 is when they acquired JK Shah, but largely that has improved in FY26, but neutral for now even on the balance sheet. Let's look at the cash flow aspect of things now, because this is very important for a younger startup, younger platform company. 4 levels, FY23 levels as well. Profitability though has been a kicker in terms of weakness shown in FY25, and hence net cash flow has also been largely very stable, very volatile. I have to mention because of what we've seen in volatility as well, but pardon me, look at the operational highlights now. Continues to be a very important parameter for the company because the net enrollment that has been increased. Look at the last 2 years also has steadily increased from 1,50,000 to almost 2,50,000 in FY25, and a huge jump of 3,28,000. And this is of course a thumbs up. Shareholding, because of the QIP done in this year, shows a dip in terms of the promoter shareholding. So let's go across, look at the next parameter now, and shows you the big dip of almost 20%. Been very, very volatile yet again as well, but look at the next parameter, that is cred. It has been the other very, very volatile period because the company's earnings have also taken a knock. The last month, the year-to-date returns also, it's steadily been very volatile. 26% downtick in the last 1 year, and very importantly, stocks trading at the same level of roughly around the 130 rupees. Investors, the people who invested in the QIP in July of 2025 was at 236 rupees. So you saw 100 rupee downtick for the company even from those levels roughly 9 months ago. And gets very interesting yet again because you have now a listed peer in Physics Wala for the company. Now Physics Wala, a known brand as well, had a decent listing, but since then also the momentum has faded. Not profitable. You look at a clear comparison and a clear win in that terms of Veranda. But we are investors. We look at multiple sectors, multiple opportunities, and hence you have to care. The likes of the Eternal, likes of Swiggy, you are looking at PB Fintech. So the opportunity, while large, if it's lucrative on relative valuation, becomes the key question, and hence for more we expect essentially in terms of the outlook for the company. Multiple key aspects to look at. We saw the new learner additions has been quite strong. 1,000 crores in revenue is what they are targeting. 8 lakh plus enrollments by FY30 as well. Enrollment numbers have been quite strong, so this would be a very interesting to watch. And sorry, pardon me again. But the next one also, when you look at the key outlook, and some more confidence to the company at this point of time, and hence becomes a very interesting aspect for them. But I spoke about the edtech opportunity being very friendly. Widening price structure is what everybody fought for, but now over the last 5 years we've seen competition waning away in terms of what has been a very highly competitive space. formula in that sense and gone back to look at the established names because of the serviceability track record as well. So when you look at the final ratings for the company, let's pull those up for all. In terms of the income statement, balance sheet and cash flow, we've given the company a neutral rating. Operational highlights have been positive, so we've given this a thumbs up. Shareholding, given the QIP, has depleted below the ownership. Street cred is a downtake because of the underperformance of the shares, while valuation and outlook are two key aspects, and we will be honest here, given it a little bit of stringency in that, but to the company, Suresh Kalpati, the executive director and chairman of Veranda Learning, is now joining in at this point of time. Mr. Kalpati, thanks so much for firstly joining in, and a very good morning to you. A very, very key crucial meeting at this point of time. How are you looking at the company's performance over FY26 leading into that meeting as we look forward to what's the expectation from Veranda in FY26?
On target. Q4 has been a fairly strong quarter for us, especially going into the last month. We expect to be on target to, 60 to 170 crores of EBITDA. So we are continuing to have strong performance across all our businesses, whether it's K-12, government test prep, or the it is now combined with this NVA Veranda.
Mr. Kalpati, also the one big crucial aspect has been the demerger of the commerce vertical. Now, a very, very high margin business, and you've given a target of almost 1,000 crores in revenue by FY30. Does that include the commerce vertical, or will that be the non-commerce vertical which will be continuing to house under Veranda Learning?
Why we are considering and we have been pushing forward on the demerger. The first is to create a very focused business which is focused on commerce. No better branding, degree of the newly listed company. We expect that to happen sometime in June. With the projected EBITDA for that business alone at about 180 crores. It's expected to achieve growth of about 30-35%. So it's expected to be a very strong listing. We expect that sometime in June. One of the key reasons that we look also from a fact that it is a space in which we have very few competitors, if you will. With even the last exams where we had over 100 with a pedigree of a brand which is over 40 years old, and alumni who are today the who is who in the financial services space, with a high level of profitability. Space is concerned. There is significant investments that is being planned purely coming from internal accruals to continue to build out. And as I keep leader in the commerce space. We have always looked at the other spaces where people choose careers, whether it's in terms of the medical profession through need or government test prep for people who those are spaces which, in a sense, we feel is fairly crowded with very strong players who are already there. In the commerce space, JK Shah Commerce Education would be sort of like an undisputed leader.
Fair point. valuation that you're getting for Veranda Learning for both the commerce and the non-commerce vertical doesn't justify the moat of the JK Shah brand which you've acquired roughly in 2022. Do you feel that the valuation
I wouldn't use as strong a word as you mentioned as unjustified. But I think given the growth that we are projecting for commerce at about 30-35%, the current entire market cap of Veranda Learning, including the commerce business, one has to see. But from initial conversations I have had with very seasoned and institutional investing to. But it's, the market has their own ways of behaving. But given just the profitability and the growth, I think it should be a strong.
There are almost 50% of your revenue coming from the commerce vertical, and then academic, vocational, all other contribute the rest 50. So almost 200-220 crores comes from the commerce vertical. That you're expecting to go to 1,000 crores. You also, within the vocational business, has seen strong growth, but the EBITDA profile isn't quite visible there yet. What do you expect the revenue targets for that business, for all those other non-commerce business?
By 27, we expect the non-commerce business, which is essentially our K-12 managed school business and the government test prep business, to contribute possibly about drivers that we are very focused on at this stage is the occasional business that was one of the verticals of Veranda. We have put it together along with SNVA to form a Veranda. By the promoters of SNVA, Vivek and Alok Singh. And one of the things that it does is it's a global university model with multiple universities in multiple geographies with multiple faculty. At a significant growth path. Currently, that stock is held as a treasury stock in the non-commerce Veranda business, and that is expected to grow actively being discussed and closed. So we will talk about it over the next 6-8 months when they actually happen. So the non-commerce business as a K-12 and a government test prep.
Right. Got it. But Mr. Kalpathy, you are giving projections for a business that's growing very well and the expectation of growth is very sharp. But for the other business that's already in the listed entity, the government side, the vocational side, I get about that revenue should double for both of them from the current 100 crores that we are seeing by FY30. Should that be the base minimum expectations that investors can have?
So the business, I think over FY27, 28, sort of to look at an FY30 yardstick, we would at least expect this business to grow by about 150 to 100.
In terms of growth projections, because you've done almost 14 acquisitions, JK Shah, of course, being one of the bigger ones, but in the commerce vertical also, you've had other acquisitions in this time. Do you feel that's a strategy that you're opportunity now doesn't allow so much competition, because we've seen a consolidation in this space also, right? And recently that big acquisition in the private space of an academy shows the significance and the tough current businesses will have to grow and show those projections?
I think the acquisitions that have been done predominantly has been to create these 4 verticals, which we have done. at any more acquisitions. We got everything that we need to organically grow. We have created enough moat in terms of competing advantages in all of these verticals. So not are we looking at taking on any further debt for scaling our business, given our strong internal cash flows. So the first 3 years of Veranda was acquiring, consolidating, and now the next couple of years will be to unlock value for all the shareholders who've been with us for the last 3 years.
Got it. And that's a big statement coming in, Mr. Kalpathy, that you do recognize that there has been a confirmation of debt being manageable and equity raise also being limited to what has been. So got that point. The other aspect has been the enrollments. That's been very positive, especially since FY24, the 20 to the commerce vertical. Would that be a statement that would be right to make?
Commerce has definitely been on a very strong growth trajectory, both in terms of registration. We put out that our government test prep business, which is spearheaded by Veranda Race as a brand, went doubling its revenue in the last 3 years. When we came 100 crores. So even the non-commerce businesses are now on a strong trajectory of revenue and enrollment growth, largely because we have been through a path of acquiring and then setting up an integration pathway. Having all of that completed in the last 1 to 2 years, they've been on an organic growth. And that's where you are really seeing the results coming. The integration.
Mr. Kalpathy, thanks so much for firstly joining in, because I know Q3 was a tough one for you. You are giving in some major projections for the next few years, but a key meeting happening on 24th April. Touch. Thanks so much for joining and giving us time here at NDTV Profit.
Thank you so much.
Well, that was Veranda Learning, a very, very interesting opportunity right now for a space that's been hot in terms of consolidation. Soon in FY27 will be something to watch out for, but that's all the time we have on KYC. Thanks so much for watching. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया।
बोलो जुबान केसरी।
बिटिया की शादी है हमारी।
बधाई हो बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा।
गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps
talent through transformation. I think it's an adoption of the technology, which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है। और
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would ask
IIT Kharagpur, bright future, can get a good job.
US companies were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी. Actually, raising fund was also difficult for first few rounds.
Really, you got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav had met 100 investors and still not.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the so this is a wedding dress which was not delivered.
Leaves and lotus bloom. Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
India, a land of story and resilience. 1.4 billion hearts share this moves towards net zero. Every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's sustainable
Phase of Kutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition from Surgical Eye.
Of US-Iran peace deal continues to loom over the Indian markets. Nifty slumps over 1.5%, while Sensex slips over 1,200 points, all sectors in the red, barring Nifty IT and Pharma. PSU banks and media cracked the most, down over 3%. The rupee continues to fall, slips past a fresh psychological mark, hitting 94 against the US dollar for the first time. The move underscores sustained pressure from global dollar strength and risk-off sentiment, keeping currency markets on edge. The government has revised its fuel duty structure, cutting the special additional excise duty on petrol to rupee 3 per litre and scrapping it entirely on diesel as Middle East war concerns continue to rock oil prices. Tata Motors passenger vehicles under pressure today after Jaguar and Land Rover The shutdown is due to a part supply issue impacting production of key models at the facility. While the halt is expected to be temporary, the development has raised concerns around near-term production, visibility and earnings impact. Brigade Enterprises, that jumps nearly 10% today after the company announces 2 new residential projects in Bengaluru, amounting to over 1,800 crore rupees in potential revenue. The surge stands out amid a broader market decline, highlighting investor optimism around the company's strong execution and entry into high-potential premium housing corridors. Hello and welcome. You tuned into Markets at 12. I'm Nisha Podar and let's take it straight to the markets. And yes, all's not good, or should I say oil's not good? Because for the Indian markets, it's the crude which is really playing truant as the single biggest impact really coming in when it comes to the crude oil prices. And because of the flip-flop in terms of the US-Iran negotiations and de-escalation of the Middle East war, crude prices remain elevated, and therefore the Indian market is also seeing that kind of a pressure really building because of the crude oil prices. Also remember, rupee is hitting a newer low for the past many days. In fact, a little bit of recovery in the last trading session has also been taken in, and 94 past has been the kind of rate that rupee has got against the dollar. So it's coming in as a worry. All sectoral indices are in the red at the moment, barring a few with minor gains. Let's focus on one particular counter because of the news developments we are tracking here. Biocon, which has announced a top management reshuffle with changes at both the CEO and CFO levels. Siddharth Mittal has resigned as the CEO and MD and will move on to a new role within the group. Varsha is here with all the details of the top brass changes at Biocon. Varsha, tell us.
Well, yes. So if you see Siddharth Mittal, who is the CEO and Managing Director at Biocon, has resigned, but he'll be with the Biocon and will, have some other leadership role, which is undefined as of now. And also one important thing is Shrihas Pradeep Tambe, who is has been appointed as the additional director of the company, and currently, if you see, he is the Chief Executive Officer and Managing Director of the subsidiary company that is Biocon Biologics, and he has been appointed, or rather for 5 years, effective from 1st April 2026, subject to the approved of the shareholders of the company. So this is in all a positive news, considering that Shrihas Tambe is the backbone when it comes to Biocon Biologics, and will also shape the future of Biocon overall, considering the company going into biosimilars, which is the next leg of growth for the company. So overall, if you see, Biocon will be defined as a biosimilar company, and Shrihas Tambe is the main guy behind that.
All right, Varsha, thank you so much for getting us those important details coming in on the top management changes at Biocon, and that particular stock is down close to 2% in trade. Let's take it straight across to the market, and how should one trade in a highly volatile and today a weak market. Nishal Maheshwari, market expert, joins in now. Nishal, it's one day up, one day down. It's volatility, I would say, instead of relief that came in for 2 days in the middle.
Yes, I think it's a global situation basically, which is also up and down every day, and that's why I think it's getting reflected in the market.
That's right, Nishal. Yes, but how does one really a one-sided affair from the US, because Iran has rejected their last proposal. So how should one really take cognizance of the kind of uncertainty that's there in the market, and what happens to the ones who bought in hordes, considering there was a relief in the last trading session and now the markets are down again?
So I think it's a volatile market. If you are a long-term investor, then maybe the valuations are interesting at these levels. And every down price from here, basically one can keep on accumulating in smaller batches. But if you are a trader, I think this is the best market to be avoided. There is no point on doing unless you are a short-term, you are on the short side. Then one can continue to keep on shorting this market because there is too much uncertainty. But I think the best thing is to avoid the market for the moment.
All right, so you're saying avoid the market for the moment, but what all factors are getting baked in or already baked in into this market, Nishal? And are we prepared for a much worse condition? And second, also how now RBI will take this particular situation where inflation is going up really on the ground level because of the various energy supplies being constrained?
So I think as far as inflation is concerned, I see the number maybe going up to 4.5%. I think which is okay basically given the current situation. I'm talking about at the current market prices of oil until it takes off big time. Then we have to take a relook at it. At the moment, I don't believe that RBI is going to be looking at any rate hikes for the moment, given the inflation is sort of okay basically on a long-term trajectory of 4%. I think that's where I think maybe it will go up 4.5% is what most of the economists are projecting. So that is as far as inflation is concerned.
Right. So, Nishal, there is one more aspect, which is that a lot of global brokerages have really downgraded India's expectation and potential for growth, backed by the kind of uncertainty that's taking place, and also that India is the worst affected market when it comes to the oil supplies, when it comes to the Strait of Hormuz being constrained. Now, how does one read into it, and how worried should the investors be of this kind of downgrades really coming in and lowering the earnings potential as well as the overall outlook?
So I think market is always ahead, and market has gone ahead and already discounted quite a bit of that, basically that the GDP is going to get downgraded. I think the worst I saw was from Goldman Sachs, which came with around 5.9% downgrading from 7.5%. So already I think 150, 160 basis points they have shaved off. That is the worst kind of a situation, worst case. But I think 60 to 80 basis point is most of the other economists are putting out. So maybe from a 7.5, you may go down to 6.7, 6.8. But that's also a pretty decent number, basically, given this kind of volatility in the world. Now, in this background, we have to see that market is already down or almost 10% from the top. So I think quite a bit of it is baked in. At the moment, I see that the market is now talking about maybe 5-6% kind of earnings growth down from 15-16. That is what the market is baking in for FY27. And I think that's a fair number, basically. That's why I was saying if you are a long-term investor, it could be a good time to actually start accumulating from the market.
Yes, but Nishal, also the question is for how long and how much cash should you put in right now? What if this particular situation really persists for longer than we really expected? So that is one question. And how much more downside on Nifty 50 are you penciling in, considering that the de-escalation doesn't happen in the given 10 days?
So nobody knows whether it's going to happen in the 10 days, 20 days. So it's a difficult call one has to make, basically. So if you are a long-term investor, you are saying invest for next 6 months, 1 year. And I'm very sure basically this cannot last for that long. So that is a time frame basically which I'm talking about. Basically, if you are an investor for more than 6 months, a year, that's a long-term investing, and that's where you should be. And from here onwards, maybe there is another 5% downside in the market, maybe 7%. But I think 20,000 Nifty is a very, very strong. Any way we calculate it, I think it's after even taking consideration saying that India is going to get even diluted as far as PE is concerned. In that scenario also, I don't think so. Every fall of maybe 200, 300 points, one can keep on accumulating. So maybe one can form batches of 15% each. If one has to spend 100 rupees, every 15 rupees one can do with the 250, 300 point fall from here.
All right. That's a good suggestion, Nishal. So thanks so much for joining us with your insights on the market, and also a strategic suggestion for the investors to really put in money in a very uncertain time. All right, let's focus on one IT bellwether. We are talking about Infosys, which has announced two acquisitions worth about $500 million. And those two are Optimum Healthcare for $465 million or over 4,300 odd crore rupees, and Stratus Global for about 890 odd crore rupees. But the stock is slightly depressed, but it's an otherwise very weak market as well. Amit Khanna, who's a partner of digital and AI at Grant Thornton Bharat, joins in now to discuss what it really brings to the table for Infosys. Amit, with these two acquisitions, you have a good view on what these companies really bring to the table. How do you see this acquisition and the benefits for Infosys?
Yeah, thank you, and good afternoon, everyone. I think these acquisitions are going to give Infosys a positioning from a mid-tier IT services company to end-to-end digital transformation player, particularly in the healthcare area. The market is moving for more verticalized sector-specific solutions. Optimum is very, very strong in that space. It is very strong in the provider area, which is where the gap exists for Infosys. And this will give a lot of solutions in the portfolio of Infosys, where Infosys can do end-to-end from a mid-tier to a large value-accredited solutions, particularly in US market, which is perhaps the largest for healthcare.
Right.
From the insurance one, I think the same analogy, though I will say the Optimum is more strategic acquisition in my mind compared to Status.
That's right, and it's also quite a large amount as well. $465 million that have been spent. So Amit, what does the Optimum Healthcare IT really bring to the table? And when we talk about the AI thrust amongst the big tech companies, how does Infosys now position with these acquisitions?
Yeah, so let's talk about Optimum for a second. So Optimum is very, very strong player when it comes to provider market in the healthcare space. It's been doing the digital transformation in that space very well. Ideally speaking, the healthcare is one of the sector which is very specialized in the nature. So if you see the large player, they have very strong vertical presence in the sector, not the horizontal presence. So look at Accenture Health or a Cognizant who are big in the healthcare space. They are very, very verticalized when it comes to the healthcare. Also, the client tend to buy end-to-end at one go. So they don't go to IT service provider for providing a small horizontal layer of IT services. So in that sense, this will give a very good strength to Infosys to actually pitch for those kind of a player. And it will be an emerging consulting against their players. I think one, they can pitch for the larger margin game. They can play the whole AI game very well because the Optimum positioning is AI-driven digital transformation rather than the classical way of in the digital transformation. So that will also help Infosys to up the game in that market.
Right. So, Amit, when we talk about the similar capabilities being there for other competing companies in the IT sector in India, who would rank first? And with this particular acquisition, how does Infosys really figure on?
But I will say that Accenture, Cognizant, they are way ahead if I look at the larger player. But also there are large specialized players in this market who are doing very, very well, including players like the Optums, the Philips Healthcare, the specialized players like IQVIAs of the world and all. They're all doing fairly well. Now, Infosys, I don't think anything will change overnight, but now it has large onshore capability to support does not have a very large delivery setup in India. So Infosys also has a way to leverage the complementing skill because Infosys is strong in doing large scale. Now it's got a very large front-ending team there, which is a consulting team. and also a very large tech capability sitting in India. So together they can make a lot out of it, and the time will tell what they make out of it.
That's right. But Amit, a lot of action is really taking place in the AI capabilities of the Indian IT companies, or at least the top 5 ones, and the mid caps like Coforge are also taking a stride. What are the trends really picking up when it comes to what is being seen in the market, where there is a divided house in terms of those who really believe in the IT companies and the ones who think that it will perish?
Still do a lot of commoditized work. Now that part of the work will be taken over by AI very soon. It does not mean the number of people required to work will reduce drastically, but the nature of work will change drastically. So they genuinely need to move closer to the client, closer to the solution, and application of AI to bring in the value to the client. I think, and all of them, all the top 5 players and some of the small players are trying to move to that direction as much as they can over the last few years. I think the trend will continue. To do this successfully will actually succeed. I genuinely feel that India will give few more large IT players over the next few years, purely because of this displacement and opportunity.
Become bigger as well, besides the pivot of the already existing IT companies. Thank you so much for joining us with your insights on the AI thrust of the IT companies, and especially what joining us.
Thank you.
All right, next we will chat about something which has really been the hot topic of discussion, especially with the IPL's season really starting in April, and ahead of that, 2 big bang acquisitions, 2 teams getting sold at over $1.5 billion. We are talking about RR and RCB. There have been a lot of talk about the steep valuations and also the earning potential of the IPL teams, and also how does IPL really now look as an these questions and analysis to Jayavardhan, who is the co-founder and CEO of N-Tracker. He's joining us right now live. Jay, always a pleasure speaking to you on for majority of the IPL teams on a YOY basis when we compare 2024 and 2025. Your analysis on that, and what are the factors
and profit both have declined for most of the IPL teams in the last fiscal year, that is FY25, and the major reason is a decline in central broadcasting rights. And rest of the income comes from sponsorship, merchandise, and ticketing business. So clearly stress at the profit is being second, what's driving the valuation of the 2 IPL teams which got sold out recently, RCB and Rajasthan Royal. So the first reason is rare opportunity to buy a team, and the brand value attached to IPL. I think that's the reason for driving the valuation. It's intangible, but I think to the room where you can sit with the businessman and tycoons and conglomerates. So I think the excess is the major reason behind driving the
kind of valuations that have been really commanded by the 2 teams, RR as well as RCB, are in line with the consumption companies, deal valuations. They are akin to that. So, and also Aryaman has made a statement, Aryaman Birla has made a statement recently saying that IPL is quasi-consumption. How do you assess this particular aspect?
So, of course, apart from the brand value and brand affiliation, there is future opportunities in sponsorships and merchandise business. So if you look at RCB balance sheet, apart from central broadcasting, IPL valuation are rising because of three things, guaranteed central revenues, scarcity of teams, and massive brand monetization potential. But 25x revenue multiple, this is clearly a long-term strategic bet. It looks irrational to us, but I think in a long term, we have seen Vijay Mallya, tweeting and, over the next 10 years, this is going to rise multifold.
Right. What are the reasons for this to rise multifold, and what are the monetization aspects very quickly?
So that is the major driver. Apart from that, all these teams are also playing different sort of leagues globally. So if you look at Kolkata, a clear headwinds there, and the sponsorship deals are also going to be fat and big in the coming time. Although the central broadcasting
speak to you, and many aspects covered there. The profits have reduced on a year-on-year basis, and these valuations have been steep, but it's also the scarcity premium that is really driving it. And as a franchise. Thank you so much, Jayavardhan, for joining in with all the details and your insights on that. All right, let's take a quick look at the market at this particular point, and no let-up. Nifty 50, keep an eye out on the market. There is no relief coming in, and the weakness really persists. With that, it's a wrap on markets at 12, but keep it with NDTV Profit.
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy.
IIT Kharagpur, bright future, can get a good job.
US companies were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family. It was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really, you got funded in 6 months?
But one term sheet.
What happens with a business when it has also a significant retail customer focus?
Emails would just say that you have ruined my life. I want to shift in house. I couldn't shift it because of you. This is a wedding dress which was not delivered.
The places where we spend most of our lives.
The NDTV Excellence Awards recognize organizations and leaders who are setting benchmarks in people-centric workplaces. The winner, Mr. Vivek Pathak, Planet Cast Media Services Limited.
The Lifetime Achievement Award.
The Tamil Nadu twist. join me in the midst of people, language and politics. Vanakkam Tamil Nadu. Here we come.
Share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us. A sustainability mission, an initiative by NDTV.
The fairways of Qutub Golf Course set the stage as the NDTV DP World greens that run true. India's top pros joined the capital's corporate leaders for a celebration of skill, sportsmanship and connection.
Two worlds meet on the greens. Champions of the fairway, leaders of the boardroom. The battle for brilliance, the pursuit. NDTV DP World PGTI Golf Pro app, the course of champions, the conversation of leaders. 28th March, Clover Greens, Bengaluru.
Perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation. I think it's an adoption of the technology which is all about mind.
Tsunami.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru?
Of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can actually use.
Tech has changed. So should your tech show.
New year. New power panel. India market open. Now in its boldest lineup. This.
I'm fully convinced on the stock. With a table thumping buy.
Stocks with me, Hiral Datia, and today we have Alex Matthews standing at the NDTV Profit Market Pit with all the action. Alex, lots happening in terms of markets, and welcome to Trending Stocks as well today. What are you picking?
Show. I've been looking from the sidelines and today I get to participate. But it's not a pretty picture. Of course, we're off the low point of the day, but we're very close, about 1.5% off. And there are a few factors. Saw that in the overnight handover from the US. This is something that is playing out in India and across the board in the Asia Pacific region as well. And I wouldn't be surprised to see the European markets move in the same of the day, close to 400 points in fact at this juncture, 359, 360 or thereabouts, but it has reached that 400 point mark earlier on in the session. India VIX, this is very crucial, has spiked in the recent past. You have a situation where the broader markets are underperforming or have come off even in the span of the last 5 to 7 minutes or so, down about 1.8% or thereabouts. So the breath is not very pretty at this moment. And you're also seeing uncertainty that persists globally. Because in these so-called negotiations that are taking place, and Iran has responded with its own set of demands, 5 of them, and there is no seemingly end to the conflict at this point. And so of sentiment that is currently playing out. And finally, and most importantly in today's context, is the fact that the India rupee has crashed quite significantly. It hit a low of 94.65 on in the what the Reserve Bank of India's response in this context is going to be. We've already seen the big story of the day, Hiral, which has to do with the excise duty cut on both petrol and diesel, at least to a certain extent.
That's the key from here on, and how they manage this dilemma is the key question, and that's going to be a focus point at our 1 p.m. special today as well. But let's quickly look at the watch list. ONGC, the gains of crude and that's the reason why the pressure continues. However, a relief coming in the form of excise duty cut. Infosys has acquired 2 US companies, and that's the reason why we're talking about it, along with Tata Speed gaining streak. In fact, what has happened is CLSA has removed HDFC Bank from their portfolio and replaced it by HSBC. HEG Graphite India, both of these counters are buzzing in trade because Graphite the Bangalore residential project launch, which has a GDV of around 700 crores, is what is keeping Brigade Enterprises in focus and up in trade. And you have a OFSS, that's Oracle Financial, on the back mega. So some bit of profit booking coming in on that counter. And Sagility, a lot of brokerages which are turning positive, and they've reiterated their midterm growth targets. So all of this and more on trending stocks today. But let me go back.
Rolling, Akshay Bhagwat joining us. Good afternoon, Akshay, and thanks so much for taking the time. Let's start things off rapid fire. And let me first ask you about HDFC Bank. We've seen it plumb low.
For HDFC Bank, 780 is the resistance, and possibly 720 is where the short-term downside is possibly opening up for HDFC Bank.
Okay, what about HEG and Graphite? Because these are reacting to news-based.
600 can be the possible target for HEG, and for Graphite India, the upside can be till 690 to 700.
Another stock in the news, Acme Solar. You heard about the commissioning of that facility.
Can be the possible upside.
Brigade Enterprise from the real estate pack did particularly well in the early part of the session, but cooled off a tad bit. Can it still be bought for the potential upside from this? Financial Services was one of the top gainers, but then again it's cooled off from the high point of the day. Would you buy at this point?
Avoid strong resistance at 7,000. Better to avoid. Give it a miss.
Give it a miss. So most of the stocks here are a miss because you're not certain about the volatility for the market as a whole, and certainly not for these individual names.
Absolutely. It's in fact some of the stocks which are trending on Google are very interesting to see. From a Bajaj Housing to a BEL, ITC, RVNL and Tata Steel are the ones that, you know, are trending on Google. Let's pick up a Bajaj Housing first.
Still it's negative, it's an avoid. Possibly 70 is the downside I foresee in Bajaj Housing for short term.
Okay, what about BEL, ITC, RVNL or Tata Steel? Anything that you like from these names?
ITC capped. 290 to 85 is a strong support, and if market supports a rebound, can see 315 to 320 in the making. Tata Steel is another buy candidate from a short-term trading perspective.
Right. All right. So interesting names. But one of the stocks that stands out after an analyst meet that was done a short while back is Sagility. And you that there is potential for strong EPS growth, close to 20% actually, I read in some brokerage notes. But let's find out what exactly the takeaways are from the various brokerage notes that have come through and quite positive. The week actually, because of the way that it moved on Wednesday. Why is it still in focus today?
Well, Alex, thank you for that. If you look at Sagility as a company, it was in focus after Nomura's note, where it saw a spark of 7 up to guidance for low double-digit to mid-teens going ahead. Further, they also see the overall shift coming in from the employee-based model and moving into project-based model, where they say that employee-based earning will be lesser and company will move into the project-based model, where they'll start earning based on the projects they do than the fixed-price projects. Secondly, they also restates that going ahead, the AI will play a very structural role for the management, and they also want to increase their stakes when it comes to provider segment. And given that the overall US pressure which they're facing in the insurance company, that would act as a tailwind for the company going ahead, and that would help the company grow further. And that's the reason the stock is buzzing into it and remains the focus.
Yeah, absolutely. So it's up. Chokalingam joining us right now. Mr. Chokalingam, as always, a pleasure speaking with you. Let me start with a question on Sagility and whether or not you think that there is significant potential upside. There are brokerages.
Good. I analyzed it. Whether you take a year-on-year basis for quarterly result or annual result, the growth seems to be quite impressive. Stock also corrected and PE also corrected.
So that's the view on Sagility. Let's talk about the graphite electrode pair, which is HEG and graphite. Now, of steel, they're used specifically in electric arc furnaces, but they're also quite a bit dependent on what plays out around the globe, particularly in China and in the US. So let's go sharply today. Parth.
Thanks a lot, Alex. So, with the weaker markets today, we have two companies standing out, which he rightly mentioned are HEG and Graphite. And the reason why these two are up today was the by around 600 to 1200 per metric ton, and this translates to a rise of around 15 to 30% from the recent levels. So now this gives our domestic players a good enough pricing power. EBITDA as well, so that is something that we need to track moving forward. And the reason why the industry leader has increased their prices is because the raw material and the soaring crude prices.
Yeah, absolutely. So quite a few supply chains around the world are getting impacted. You heard just a short while back how the lack of helium supply is affecting chip manufacturing. On graphite electrodes in HEG and graphite. Mr. Chokalingam, I don't know what you think about the fundamentals, because they're yet to actually announce that they too have taken price increase.
Would not chase, after this rise, because user industry is steel industry, and because of this war, already this morning, if you see the global institutions have, revised downward. I would, unless it corrects 5-10%, I would not buy them at these levels.
So that's with regards to where graphite companies go. But moving on, the one is given out. Now, to be noted that this is not something that will be passed on to the consumers. This does come in as a benefit to your OMCs because of the rising prices. The other way to look consumers facing a price hike, here they will be at a status quo, but this does become an issue when it comes to the government's revenue stream. But let's listen in to what Finance Minister Nirmala Sitharaman
विदेश में मार्केट में दाम बढ़ रही है क्रूड का, उसके कारण पेट्रोल और डीजल का, एटीएफ का। माननीय प्रधानमंत्री जी ने ये चाहा कि निर्णय लिए हैं कि ऑयल मार्केटिंग कंपनीज को सपोर्ट दें और जिससे वो ज्यादा दाम में खरीदने वाली चीजों को सरकार उनको मदद करेगी, मगर जनता दाम विदेश में बढ़ रही है, उसके कारण ऑयल मार्केटिंग कंपनीज खरीदना रोकें। ये से हालत ना हो, वो फिर भी खरीदें, फिर भी ले आए और हमारी जनता को समय समय आज इस निर्णय के कारण सप्लाई कमी नहीं होगा, सप्लाई में अवेलेबिलिटी में कमी ना होगा, जनता को डीजल भी, पेट्रोल भी, क्रूड भी मिलेगा।
To prevent the rise in inflation, and that's a very important talking point heading into the end of trade today as well. But one of the stocks that is bearing the brunt of selling, and this is again back has announced that one of their key plants, that is a plant in Solihull, is going to be shut for a period of at least 2 weeks. Let's find out from Puneet why this is significant. Puneet, Tata Motors PV and JLR
downward spiral. Essentially, we started in last April of 2025 with the tariffs for Donald Trump, and then post that you've seen the cyber attack come on in the month of September. So you've already seen productions in next year as well, because you are seeing consistent pressure on production, as you rightly mentioned, in the plant in UK. Period of this is a pre-scheduled shutdown also for Easter holiday, so there's some bit of over in that. Out this information first, but the important part is that it's been one of the years where Tata Motors might find it difficult to even cross 3 lakh mark for JLR, which generally operates at 4 lakh in terms of sales performance. But now the CEO of the company, there seems to be a big challenge for the company going ahead.
Okay. Well, so that's the picture on Tata Motors. Mr. Chokalingam, specific question on Tata Motors PV is in India. Would you also have a similar opinion, and would you stay away from Tata Motors PV, or does it become attractive when it has fallen as much, and does this actually all
on this same channel? I've been consistently saying for the last 4 to 6 months that Tata Motor commercial vehicle business is far superior for 2 reasons. Tata Motor PV has and its investee company also a play on the global theme, whereas Tata Motor CV, the commercial vehicle is a play on domestic demand, and its investee company capital EV to Tata passenger vehicle.
With regards to where Tata Motors PV and CV goes, and Mr. Chokalingam gives his pick out of the two. Another stock that's buzzing in trade today is flat. Jasmeet is with us to tell us more as to what these acquisitions could mean for an Infosys and what brokerages make out of it as well. Jasmeet, over to you.
Well, Hiral, thank you for that. Infosys is on a speed to healthcare, especially Optimum Healthcare, acquired for nearly 4,300 odd crores with a valuation of 1.7 times the price to sales, which seems reasonable. The second one is Stratus, which is in the insurance segment space, where it acquired this particular acquisition company extends their strong holding in the US in healthcare and insurance space, which they see growing, and they also wish to leverage the overall AI platform that's Topaz to increase their client traction going ahead. Going ahead. Well, we also have brokerage notes which have come up and given their opinions and what they feel of how much of growth will this acquisition add to the company going ahead. We have Morgan Stanley on the overall counter, which says they maintain equivalent target of 70 revenue going ahead. Further, we also have something like a Citi which says that they maintain neutral stance with the target price of 13.95, and they note that they see overall 1.6% of increase in Infosys revenue going ahead in FY27 with this particular these acquired entities to the Infosys going ahead. Secondly, they also make a note that the overall deal closure timeline is a very crucial thing to watch out for. While thirdly, they also state that with this, we can expect a lot of other IT companies to move ahead with more acquisitions.
Thank you so much for that. In fact, Mr. Chokalingam, a quick view when it comes to Infosys.
Certainly, it's a buy. I strongly believe 10 to 15% return possible for 4 stock as its operations, and also the rupee depreciation, which would be favorable to a company like Infosys.
That's with regards to where Infosys go. Moving on, recent listing, which is Tenneco, that had a conversation with Arvind Chandra, the whole-time director and CEO.
Every time there's technology, complexity and disruption involved, Tenneco actually leads the way. And call it a marriage, a good marriage of high technology and affordability. In India, everything has to be affordable to the end consumer. And the challenge given to us by Mahindra, we accepted that to say, okay, most of the solutions that you have in the field are the conventional one tune kind of ride, which means you are never comfortable in any road. Yeah. Not in a regular road or an uneven road or a gives us the ability to take it to the next level where we have these hydraulic valves that interact with a shim stack, depending on the mechanical ingenuity, and we do that without using electronics, without using software, without using sensors, without using motors. So that's a brilliant idea that has now come into the market. We are very finds a much broader use across other OEMs, across the entire passenger vehicle space. We think it's going to become a big disruptor in the Indian market.
Well, that's a very big point that you make, that it comes without the electronics part. Of course, a lot of processes that you are seeing around is regarding that product. So you are seeing that continuous demand being there as well. And as you rightly said, listed in November, had a bumper listing, bumper session as well. Manufacture the exhaust and then the suspensions which come in the ART system, as you mentioned.
Yeah.
In terms of your capacity, you are operating at a very high utilization. Do you that a lot more capex for both these are on the anvil now?
Absolutely. So right now we are in the Hosur plant near Bangalore. So this plant makes 7 million shocks a year, and we're running Official announcements yet, but it's just a matter of time that that happens, because our order book, we said that in our Q3 as well, that our order book has been very strong. The 2028 revenues are already 100%. Announced a new plant for the clean air business, which is the exhaust systems in Kharkhoda in Haryana. But it's just a matter of time that we will be adding more capacity here as well, because the order book has been very solid. To 60% ROCE, that's what we reported at the end of FY25, because we got a very unique, standardized and modular approach to manufacturing, and you might have seen that over here, where we call it Lego. But we run that at very high capacity utilization, and because of that, we have this unique strategy that allows us to have high capital efficiency, and that's why the ROC is so high. And of course, as we move up the technology evolution curve, our margins will also improve.
So that's the management of Tenneco. In fact, very quickly, any view, Mr. Chokalingam, when it comes to Tenneco?
Hold in case it declines hard. Business looks too good. Return ratios are very good. I'm giving only hold because 25 revenue growth was not missing.
So that's with regards to where Tenneco goes. But thank you so much, Mr. Chokalingam, for joining in. Always a pleasure to speak to you as well. But completely out of time, it's a wrap on this edition of Trend Talks.
That भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family. It was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift in house. I couldn't shift it because of you. This is a wedding dress which was not delivered.
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation. I think it's an adoption of the technology which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
The fairways of Qutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition, from surgical iron play to composed putting on greens that run true. India's top pros join the capital's corporate leaders for a celebration of skill, sportsmanship and connection. Watch at these times.
Two worlds meet on the greens. Champions of the fairway, leaders of the boardroom. The battle for brilliance, the pursuit of precision. As Bengaluru hosts the season's final Pro-Am, NDTV DP World PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 28th March, Clover Greens, Bengaluru.
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation. I think it's an adoption of the technology which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table subject.
Hello and welcome. You're watching NDTV Profit with me, Hiral Dahadia, and my colleague Samit Sarkar. And this is a special conversation when it comes to the excise duty cut, the implications when it comes to OMCs, the implications when it comes to the government, the exchequer. And that's the big question from here on. Now, fuel prices are firmly back at the center of the policy debate, and in a decisive move, the government has cut the excise duty on petrol to ₹3 per litre and reduced diesel excise duty to nil, which is zero. While the stated objective is to temper inflation, the real question is transmission. Will the transmission translate into lower pump prices? No, the answer is no to this one. Or simply it is the ease of the balance sheet stress of oil marketing companies. That's what we're talking about, Samit, right?
Exactly. So there are two things that have happened. Firstly, they have reduced the excise duty that they used to charge, the government used to charge on petrol and diesel. And the second thing is they have made it sure that this will not be passed on to the consumers. So it's clearly a beneficial point coming in for the oil marketing companies who have been currently suffering a huge loss that we are seeing. And the Finance Minister Nirmala Sitharaman also said that the move aims to ensure uninterrupted fuel supply and protect consumers from global price shocks. Listen into what the Finance Minister had to add on this excise duty cut.
विदेश में मार्केट में दाम बढ़ रही है क्रूड का, उसके कारण पेट्रोल और डीजल का, एटीएफ का। माननीय प्रधानमंत्री जी ने ये चाहा कि कंज्यूमर का प्राइस बढ़ना नहीं है। उसके कारण हम निर्णय लिए हैं कि ऑयल मार्केटिंग कंपनीज को सपोर्ट दें और जिससे वो ज़्यादा दाम में खरीदने वाली चीज़ों को सरकार उनको मदद करेगी, मगर जनता के ऊपर रेट बढ़ाना नहीं होना चाहिए। दूसरा, बड़ा दाम विदेश में बढ़ रही है, उसके कारण ऑयल मार्केटिंग कंपनीज खरीदना रोकें। ये से हालत ना हो, वो फिर भी खरीदें, फिर भी ले आएं और हमारी जनता को समय समय पर सही क्वांटिटी जितना भी मिलना चाहिए उतना मिलने का इंतजाम करें। इसीलिए आज इस निर्णय के कारण सप्लाई कमी नहीं होगा, सप्लाई में अवेलेबिलिटी में कमी ना होगा, जनता को डीजल भी, पेट्रोल भी, क्रूड भी मिलेगा।
So let's get into the details of this. Firstly, the government has cut excise duty on petrol to 3 rupees per litre from 13 rupees per litre. Now, do remember that there are 4 components when it comes to excise duty. There is basic excise duty, special additional excise duty, agriculture, infrastructure and development cess, and then there is additional excise duty. Now, out of these 4 components, the component that has been cut is special additional excise duty. Here, petrol has come down to 3 rupees from 13 rupees and diesel has come down to 0 from 10 rupees earlier. So a 10 rupees reduction on both the retail fuels, that is petrol and diesel. And this brings down the total excise duty which the government charges on petrol from 21.9 rupees per litre to 11.9 rupees per litre, and on diesel from 17.8 rupees per litre to 7.8 rupees per litre. Now, as per Nomura, the blended marketing margin. So what does this do for the oil marketing companies? This lowers the marketing margin losses that the oil marketing companies have so far been incurring on sale of every litre of petrol and diesel. Now, as per Nomura, the blended marketing loss that oil marketing companies are were incurring was close to 48.8 rupees on sale of every litre of petrol and diesel, and this now comes down to 38.8 rupees given the fact that excise duty has been cut by a similar amount, and this will not be passed on to consumers. Oil marketing companies will be keeping it to themselves to protect their balance sheet. Now, this will reduce the losses for the oil marketing companies, and change of every 1 rupee per litre on the margins increases the EPS of IOCL, BPCL and HPCL by anywhere between 14 to 24%. But do remember that even after this reduction in excise duty which benefits the oil marketing companies, all the 3 of them are still selling petrol and diesel at a loss. Now, what will be the impact of this on the government? Now, India consumes close to 170 billion litre of petrol and diesel on an annual basis. Now, this is as per analyst estimates, and this cut will translate into an annual loss for the government of close to 1.7 lakh crore rupees, now which is nearly 5% of the central government's gross revenue. So a big hit coming in for the government if on an annual basis, if this excise duty cut continues to prevail throughout FY27. So that is one thing that we need to watch out for. And to discuss the same, let's get in Gaurav Gupta, Chief Economist of IDFC First Bank. So a loss of close to 1.7 lakh crore is what is expected. A loss of close to 1.7 lakh crore rupees is expected for the government. So ma'am, how do you expect the government to make up for the shortfall firstly?
So the net actual impact will be lower. It's around 950 billion rupees, which is around 0.2% of GDP. And that's because they have also increased the windfall tax on export of diesel as well as ATF. So on one hand, there will be extra revenue generation on the export of these 2 petroleum products, which will balance out the loss of revenue from the excise duty cut on petrol and diesel. So net for the government on a 12-month basis, the revenue loss will be actually lower, somewhere around 950 billion rupees. Our expectation is that given the extent, it's a much bigger cut. We were expecting a lesser cut than this, but it's a much bigger, significant cut. It also shows that in the Government of India assessment, how serious this sort of West Asia crisis is and how they are looking at it. We assume that, it's not necessary that the excise duty cut will be there for the full 12-month period. It can also happen that if, let's say, the West Asia crisis de-escalates, and the second half of the year, there's a sharp drop in crude oil prices, then it's more or let's say a half year impact. Then instead of a 950 billion rupee revenue loss for the center, it can actually come down to around 440 billion rupees. If let's say you just take 6 months of these excise duty cuts on petrol and diesel.
Okay, but just wanted to check with you on this. Obviously, yes, the government has increased export tax on diesel and ATF, but what channel checks are now indicating is the fact that refiners have anyways stopped exporting most of the petroleum products. They are trying to store the same into the domestic market, given the fact that there is still uncertainty on crude availability that could happen going forward. So the impact, don't you think, could be on the higher side?
So if that's the case, then definitely the impact becomes the higher side. In our case, what we have done, we've taken, assuming for the 950 billion, if you take that estimate, that assumes that the quantity of diesel and ATF exports are at par with what we saw last year. And last year also was quite a weak year for both diesel exports as well as ATF because of the Russia-Ukraine and plus the sanctions on the Russian crude. So anyone using Russian crude to create refined products was also getting targeted. For example, we actually saw a sharp drop in Indian exports in FY26 of diesel as well as ATF. ATF, I think, was down by 21% in the year, and diesel also saw a significant decline. So taking the export pattern of FY26, that's how we're getting the net of impact. But yes, suppose if there is a standstill in our exports, which is still not the case, officially the government of India India remains one of the few countries which is not curtailing its exports of refined petroleum products. But if there is a slowdown and it stays for a large period of FY27, then the net cost impact will definitely go up. It can go easily above 1 trillion plus 1.5 trillion plus. But just to give you a sense of the revenue loss, if let's say the government had not increased ATF and diesel windfall gain tax, and you had only the duty cut, then the revenue loss is around 1.8 trillion for 12 months. So it can't be higher than that. So at max, let's say if our exports get impaired, it will be around 1.3, around that margin. So not too much of a risk to our 950 billion estimate.
Gaura, good afternoon. This is Hiral here. You're talking about the export side of it. Now, there are reports suggesting in terms of brokerage notes where the government has increased the excise duty by 21%, and this is when it comes to domestically sold ATF, right? Is that something that you've taken into consideration as well? And if not, and if you have to, does anything change?
We have taken into account the windfall tax that they have done for exports as per the notification that we saw from the gazetted notification. So that, as per our interpretation, was limited on export side, not for the domestic consumer. As per our understanding, there is no hike for the domestic consumption of these ATFs, because that will be counterproductive from the government. Is what they're trying to do is they're trying to protect the OMCs as well as the consumer. So our interpretation is that this windfall gain tax is on the export side.
Stay with us, Gaura. We have Mr. M.K. Surana, former CMD at HPCL as well. Mr. Surana, pleasure to speak to you as well. I know we've been talking about this in terms of the excise duty cut that has come in. Let's break this up into two parts. First up, in terms of the impact when it comes to oil marketing companies, yes, it will help reduce losses on sale of petrol and diesel. And this is if benefits are not passed on to the consumers. And that's where we're sitting on right now. Your back of the envelope calculation, how are you looking at this to benefit, OMCs, and to what extent?
Good afternoon to you and to Gaura. What the excise duty reduction is there, to my understanding, it is not to be passed on to the consumers. And it will reduce the losses which the oil companies are bearing or the under recoveries which the oil companies are having because of increase in the crude prices in the current situation. There is one more angle, that because it is a high volume business and there is a lot of liquidity required on the part of OMCs also. So to reduce the burden of the excise helps in reducing the liquidity. Otherwise, you can't be buying crude at a higher price and selling the product at a lesser price with such a high volume, which may lead to the liquidity problem otherwise. So as far as the exact quantum is concerned, I would not like to guess right now because it will differ from companies to companies depending on what is their share of marketing and the refinery volumes and how much they are buying from outside. And also at what price they have tied up the crude, because that item is slightly sensitive in the current situation, that who is buying from whom at what price. So I would like to comment on the exact quantum, but definitely it will help in reducing the losses which are under recoveries which they are having.
Right. Just as per your understanding and analysis, at this point of time, what we are hearing from our channel checks is that though government has increased the export tax on ATF and diesel, but at this moment refineries are anyways refraining from exporting these products. So this move will technically not benefit the government much, right?
No, basically the purpose of putting the export duty is to ensure that some of the people do not export because the international prices are high at the cost of the domestic consumption where the prices are a bit curtailed or static.
Right.
And otherwise what will happen is that the private players will be exporting and making the profit, and all those volume will shift to the public sector oil companies and their losses will increase. So it is a sort of balancing act which the government has done, wherein there is a discouragement to export, and at the same time there is a reduction in the excise duty on so that the oil marketing companies at least have a lesser burden than what it is supposed to be. At the same time, the consumers are not required to bear the burden of the higher prices, which will have the macroeconomic impact in terms of inflation, etc. So the similar thing has been adopted earlier also, where the government has tried to manage the increase and decrease in the crude prices by varying the taxation without impacting the market price.
Right. Yes, sir. The oil marketing company, in fact, the PSU OMCs are not taking any price hikes to offset the impact. But private players, on the other hand, have already taken a price hike. Nazara, for example, has increased, I believe, diesel prices by around 5.3 rupees and petrol prices by 5.3 rupees and diesel prices by 3 rupees per litre. So do you think this will lead to a market share shift towards oil marketing companies, and that could also at this point of time be negative for them given the fact that they're already incurring losses on sale of every liter of petrol and diesel?
Recoveries will be more than this 5 rupees and 3 rupees currently, and therefore the volume is already shifting to the public sector OMCs who have not increased the price. Rather, there would have been the private players would have been discouraging the sale currently, as has been done in the past. So one of the reason why you see some of the crowd at some of the OMC petrol pumps is because of those volume shifting from private sector to the public sector companies.
Mr. Surana, we're talking about under recoveries. As Soumit mentioned, a very conservative number, but a couple of brokerage notes are of the opinion that they're somewhere in that range of, say, 30, 35. That is the kind of number that we're picking up from a brokerage note. And post all of this, expectation is it could actually come down to what, 40. How do you read this kind of a print coming in from a brokerage note like a Nomura?
So I would not like to comment on that. I will leave it to the analyst and the people who comment on the stock market to get this on that. But only thing I can say is that it is not as straight as the people understand, because they must be doing the daily crude price and daily product prices. But actually the time when you buy the crude, process, it comes to the market, there is a time lag. That's number one. Second, the companies follow different strategies to price the crude when they make their contracts. And therefore, rather than a straightway trying to jump to a conclusion, I would probably refrain from commenting on it right now. And especially not so close to the year end.
Okay, stay with us, Mr. Surana. Gaura, let me come to you. You know, we've spoken about the quantum of pressure that it could put on the exchequer. Now, the question is the fiscal deficit pressure that comes in the form of the revenue loss to the government right now, one. And the other side of the story over here is, if they wouldn't have done something like this, they would have to let the OMCs pass on the price hikes that were happening, and in turn leading to higher inflation, which then would trickle down again to the government's borrowing program. if you have to look at both sides, do you think this is a better option that the government has selected, number one? And two, what is that trickling effect that you're expecting to see now?
It's a very good question, actually. I think the government's intentions are quite noble. It's a much bigger cut than we had penciled in. So they are trying their best to fully protect the consumers. So what had happened during the Russia-Ukraine period, where we had almost more than 100 days of crude above $100 per barrel, is that there was a burden sharing model. The government of India cut excise duty by, let's say, around 8 rupees per litre and 6 rupees per litre on petrol and diesel. There was also a 3% increase in retail fuel prices for the consumer. OMCs also absorbed some part of the, let's say, the LPG side of the shock in terms of under recoveries. Now, this is a much larger cut. So I would say the insulation to the consumer is more, but I don't think the government will benefit from the perspective of fiscal, which you mentioned in terms of the borrowing yields. There also the cost will have to be paid. So after penciling in this sort of cut, and our estimate is, let's say, this is only for 6 months. And then there are other costs that the exchequer has. There will be fertilizer subsidy that will go up. During Russia-Ukraine, your fertilizer subsidy bill went up to 1% of GDP from a budgeted of 0.4%. Currently, again, it's 0.4%, which is budgeted. Then you have LPG under recoveries. During Russia-Ukraine, the LPG under recoveries were around 220 billion rupees. This year, it could be much more. We have penciled in, let's say, around 330 billion rupees in terms of under recovery. So that will add to the LPG subsidy bill. Now, this cut, as you earlier mentioned, it does protect the OMCs to an extent, but not fully. If you look at the oil minister's tweet, where he has mentioned that the under recoveries or the losses that OMCs are facing on petrol and diesel, it's somewhere around 25 rupees to 30 rupees per litre. So this only takes some part of the pain away. There is still half of the pain that they are absorbing. Plus, they have that pain on the LPG side. So it can affect the dividend revenue of the government of India that the government gets from oil PSUs. And oil PSUs account for around 33% share of the dividend income. So the hit to the fiscal will be there. Our calculation on a gross basis, just looking at the revenue foregone, extra subsidy expenditure, and we are working with, let's say, a 6 months sort of hit from an excise duty cut. It's still coming around 0.5% of GDP to around 0.7% of GDP in terms of extra cost to the exchequer. So it will add to the borrowing cost.
It will add to the cost. Let me just once come in here. Now, if you see the bond yields, on the back of this kind of announcement, we have seen that spike which has come in. Is that telling you that it is weakening of the fiscal discipline is what markets are reading into with the kind of spike that's coming in terms of bond yields as well?
Yes, I think the markets are the best barometer of risk assessment. So the fact that the 10-year yield zone to 690, it shows that the market is also sensing that there is fiscal slippage risks. And this is not a minor crude oil shock. Many have called this a combination sort of shock where you have COVID-like features, where you have a supply side problem, which can be not just in energy products, but also in chemicals like sulfur, fertilizer, because we get 33% of fertilizer from GCC countries. So it has a combination of an oil shock and a supply side disruption. So in a way, it is much more negative than, let's say, the Russia-Ukraine crisis was. So the market is very accurately pricing the fiscal slippage risks. So even Russia-Ukraine, which was purely an oil shock, even there you saw the fiscal deficit, it actually was higher than what was the budget estimate. So the movements today have priced in the slippage risks.
Right. Surana sir, just wanted to get in one comment from you. Yes, government has done a very good move when it comes to reduction in excise duty, but this has also led to some fear or some doubt in the market when it comes to oil exploration companies like for ONGC. Obviously, the fact is that post the Exploration Act that was passed, the government cannot come in and impose any windfall tax. But what is your understanding here? If you could just give your understanding to the viewers to our channel on this as well.
just before coming to I just wanted to add one point to the earlier point, that compared to the Russia-Ukraine war in 22, this time the exchange rate is much higher than that time. And every rupee exchange rate change currently will make a difference of 55 paisa or so on the petrol or diesel prices. So that also need to be factored in. So coming back to your question on the upstream companies, see, the situation is unusual. So while the new oil exploration laws does provide some sort of protections to ensure that the investors remain attracted to the Indian exploration business and and with a lesser risk, but at the same time we need to see how it goes forward, because the situation is a developing situation and it is an unusual situation. So it depends on how the prices of the crude goes up and how long this goes, and what is the exchange rate trajectory it follows. But right now, currently, the understanding is there that probably the upstream companies may not be required to pay the windfall tax, but the government may have different ways to make the upstream company participate in this undertaking.
Okay, I think all of these are just questions which only the government can answer in the end. But thank you, Mr. Surana. Thank you, Gaura, so much for joining us on this special discussion. Gives a lot of clarity to the viewers as well in terms of what could be expected and the kind of impact that we could see from here on. But a welcome move, at least, for the OMCs by the government so far. Going ahead, what will the impact be is what we need to wait and watch and see till the time the West Asia crisis continue. But a thank you from Somit, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav, had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift an house, I couldn't shift it because of you. This is a wedding dress which was not delivered.
Tonight is about the people who build the places where we spend most of our lives.
The NDTV Excellence Awards recognize organizations and leaders who are setting benchmarks in people-centric workplaces. The winner is TVS Motors Company Limited. The award goes to Zydus Life Sciences Limited. The winner is Make My Trip. Mr. Vivek Pathak, Planet Cast Media Services Limited.
The Lifetime Achievement Award.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
The fairways of Qutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition, from surgical iron play to compost putting on greens that run true. India's top pros joined the capital's corporate leaders for a celebration of skill, sportsmanship and connection. Watch at these times.
Two worlds meet on the greens. Champions of the fairway, leaders of the boardroom. The battle for brilliance, the pursuit of precision. As Bengaluru hosts the season's final Pro-Am, NDTV DP World PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 28th March, Clover Greens, Bengaluru.
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation. I think it's an adoption of the technology which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy.
All right, we're talking about Biocon when there is a change of guard, the top brass management changes. So Shrihas Tambe is going to be the new CEO and MD of Biocon, remember, from 1st of April. And also remember that he'll be the first MD and CEO of the integrated Biocon. So that's going to be a big one. We are joined by Shrihas Tambe now. Shrihas, many congratulations. And of course, this will be a Herculean task because this is a very important milestone in the company's journey on an integrated basis. What will be your focus areas in terms of integration and getting both the values of Biocon and Biocon Biologics?
First off, Michelle, thank you so much for having me on your show, and thank you for the kind words. It is, in that sense, the same companies. I begin my 30th year at the Biocon Group this year, so I really don't see this as two different companies that are coming together. The DNA is pretty much the same. We share the first name, the same first name as well. We do have different businesses, and as your business strategy evolves, which I've seen happen at the company so many times over that I've been here now. One of the things that is important is that you align the talent pool that you have to reflect that change. And I think we've done that remarkably well when we did that integration of the acquired business from Beatrice. And I believe we're in a very good place as we've now completed the integration of the biosimilars, Biocon Biologics business with the generics business that we had. So we're looking forward to building a fully integrated global medicines company at Biocon now, which will now compete on science, scale, and access. So very exciting times ahead of us, Nishin.
So you have worked, Shrihas, for Biocon for the last 30 years in different roles, but you have been the MD and CEO of Biocon Biologics. So does that part of the overall integrated unit of Biocon now take precedence over the other businesses, and therefore your expertise is going to be valuable?
Well, I think more than precedence, it's important to see what are the different constructs that you will put together as you grow. One of the things that we're putting together is